Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. Today onwards, we are going to have our discussion on this topic called customs law under indirect taxation. So we have in total 6 sessions altogether, right from today till next week. So in 6 sessions, we are going to cover entire discussion on customs law. Don't expect that you're going to become a master on customs law after attending these 6 classes. Reason, we have ocean. Customs law is a big ocean. What we are going to see in our institute material, this particular module 4. This particular module 4 has been summer cut where the important gist of the provisions from customs law and the rules framed therein have been picked up for our final attempt. So students who doesn't have, like 95% of the time, we would see that none of you would have an exposure in your internship days on customs provisions, barring few aspects of your verification of bill of entry or verification of the GST issues when export of goods were to be declared in GST interaction with ICAI portal. Barring this particular exposure, all of you would have been very minimal in terms of understanding what is the valuation mechanism, how do we understand safeguard duty, what do you understand by SVB order, how the rules are framed with respect to duty drawback, how do we understand what is that I get as a duty drawback. So these are the minute to minute aspects which are there under customs law, and considering the exposure and experience we have in our internship days, your institute material was made very thin. And students, please be assured, 25 marks is the weightage from this particular paper called customs law. And out of 25, right away I will give you the pattern in which the questions are set. Please have the institute material in front of you. And also, before, let me have the confirmation from some of you. Yes. Thanks, Namita, for the confirmation. I was about to ask this confirmation for the audio and presentation. Yes, Nisha. Good evening. So you have this institute material in front of you. I'll give you the pattern how examination questions are going to be tested, so that you'll be comfortable in terms of sailing through and reading the examination problems. I'll ensure that most of the problems are from institute material, are covered from your classroom discussion point of view, and please be clear that most of the problems in examination are from the institute material, which are based on the concepts tested over here. So this is an open secret which all of you should know how to practice and what to practice. So my recommendation, if you want to score 20 out of 20 in your customs paper, don't leave any of the examples which are not given with solutions in your institute material. I would say these questions are the base for the examiner to test in your examination. And keep in mind, our institute material is a boundary within which the questions are framed from your examination point of view. Right, students? So with this brief, let us start with our journey. For examination point of view. Chapter 1, Levy and Exemption. And this is going to cover 4 marks from your examination point of view. So this topic, levy and exemption, you may expect questions on exemption. What is an exemption notification? How the government frames exemption notification? How do you deal with the principle of promissory estoppel? All these aspects. In addition to that, questions in relation to goods damaged, goods pilferage. These are the topics which would be tested as a theory question for 4 months. Then from chapter 2, types of duty, chapter 3, classification. These 2 chapters together, you can expect 1 4 marks theory question where you will be tested in your examination with respect to aspects of calculation of customs duty. How do you apply customs duty? How do you calculate IGST? How do you collect this social welfare surcharge? How do you calculate your protective duty or anti-dumping duty? Mechanism of calculation. A simple problem for 4 marks you can expect. Then rules of your classification, customs tariff act. There are rules of interpretation which are in fact borrowed into GST law. If you look into classification aspects under GST, this is nothing but carried over from customs tariff. So we will learn on these rules of interpretation. These two chapters, chapter 2, chapter 3, covered, put together, you can expect one theory question or a problem for 4 marks. Then we have valuation, import and exportation, transportation of goods. Chapter 4, chapter 5. Both combined together, again, one problem for 4 marks you can expect. Then from your duty, drawback and refund, expect sure one question from these two chapters. And foreign trade policy. Examine the provisions of EOU, examine the provisions of SEZ. What are the duty benefits? What are the duty remissions available under foreign trade policy, chapter 8. So this alone has got 4 marks weightage. So now having a pattern understood, like out of 25, 20 marks is what you can expect from this particular module number 4. And the 5 questions are from MCQ point of view. As I keep telling always, please look at your MCQs. Please be sure with the RTP, which is there in the Board of Studies portal. So this is the backdrop, students. And as I say, 8 sessions we are going to cover this customs law. And this is just a tip of the iceberg, what we are going to study from exam. How the constitutional authority was given for the purpose of formulation of the laws concerned. Few important definitions. Like when we look at definitions, I wouldn't ask you to mug up the definition. Rather, I'll take few definitions. How briefly this definition is going to explain a concept. It is going to explain a rule we will understand. Not entire definitions, few definitions. Then the crux of today, levy. How does the levy of customs duty happens? And what is the triggering point of levy of a duty or tax? Assessment of duty. What are the mechanisms? How does the assessment of this particular duty happens? Remission, abatement, and exemptions. Now, this remission, abatement, exemptions, this is one point. Examination, you will be tested for 4 marks on the basis of various aspects concerned. I have taken few examples. Once you read those examples, you will get yourself connected why you have to read this particular chapter and what is there in store for you. And I would put it this way, students. Don't look this customs law only from examination point of view. This customs law is one area very less people have been into practice of this particular area. 2 reasons are there for that. First reason, this requires a lot of reading knowledge. Second, the kind of amendments do happens in this area, you have to have a habit of reading on a regular basis. But take it from me, if you count on your fingers, there are hardly handful of people across India who practice in customs law and who have authority on this particular subject knowledge, right? So this is one reason. Second reason, once you get into organization as a CEO or a CFO or as a consultant, there are few areas where you can bring a value addition as an internal auditor, as a statutory auditor, as a consultant, right? So there are a few areas where you can guide the assessee how to understand and interpret the customs provisions. I'll take you through a few examples where there is a value addition, there is a scope for you to give inputs to the assessee concern. Now, we will take a few examples and then we'll come to the crux of today's discussion. First example, PPC Limited have imported goods from Japan during March 2020. Due to operational issues, these goods were not cleared from customs station. Rather, same have been kept in a warehouse. Rate of duty applicable during March 2020 happens to be 12%. During June 2020, the above goods were cleared for home consumption. At that point in time, the rate of duty is 18%. Examine the point in time when the duty has to be paid. What is the tax applicable? So here, I'm going to touch upon something called your bond warehouse concept. Under customs law, there is a concept of warehouse, which is a powerful tool for those organizations where there is a space constraint. And warehouse, that is bonded warehouse, is one concept which you wouldn't have come across in the normal course of business, which entitles the benefits of deferment of duty payment. I can defer my duty for a period of 90 days without payment of interest. So this particular provision is one thing which I would recommend you to have a watch on. When we progress in our discussion, I'll explain you what is the concept of warehouse, why someone has to look up this concept. And in this particular example, what happened? When the goods have reached India, the rate of duty as per Customs Tariff Act, there is something called Customs Tariff Act. So there are two acts under Customs law. Customs Act 1962, Customs Tariff Act 1975. Now, most of you who have not looked at this particular law, see, for administration purpose, all my procedures are governed under Customs Act. The rate of tax, exemption, are prescribed under Customs Tariff Act. So this is the base, like all my administration, like giving a permission, getting a bond, filing a bill of entry, filing a refund application, all these are governed by my Customs Act, appointment of a proper officer. To determine what is the rate of tax, to determine what is the duty payable, these aspects are covered in my CTA, Customs Tariff Act. Exemptions connected with my payment of duty, all these are connected with my Customs Tariff Act. So these two acts you have to keep in mind. Customs Tariff Act 1975, Customs Act 1962. So when you're reading these particular provisions, these are the two acts which generally we have to read together. So the gentleman, when he has imported the goods, the rate of duty happens to be 12%. After 3 months point in time, when he wanted to take the material out of warehouse, the rate of duty happens to be 18%. So the question comes is, can I pay the 12% when the goods actually have received, or when I remove out of warehouse the prevailing rate of tax, the prevailing rate of duty? What is it? What is that I have to do? So in the process of discussion, I'll give you a clarity on how do we fix upon this levy. When does my levy gets attracted? There's a fantastic judgment in case of Bombay. There's a trader who has imported goods into the Bombay airport. Due to space constraint, this particular ship has to travel back to Karachi. After a month or so, it will come back. So it was a fantastic case, which is cited in your institute material. Appropriate slide, I'll brief you on that particular example, right? So this is one example talks about the point when the levy gets attracted. Next. Point example B. A consignment worth rupees 30 lakhs has reached Chennai port during January 2020. Mrs. ABC Limited is the assessee in whose name the airway bill is prepared. Airway bill is nothing but a material which has come through air, and this particular airway bill, in a shortcut, we call AWB. AWB is a document which indicates who is the supplier and who is the recipient. Person who is going to make the clearance of those goods are indicated in airway bill. So this is the entity which has imported that particular material. It has been prepared before it reached customs port. So this particular entity has asked their CHA, clearing house agent, to prepare an airway bill for the purpose of customs clearance. Assessee have noted that the above goods have reached Indian customs with a considerable delay beyond 3 months of scheduled date. So there is a delay by 3 months. Examine the obligation and responsibility if the above consignment is not cleared by assessee. So I, as an importer, if I don't want to execute, if I don't want to comply with my obligation, contractual obligation, the goods have been imported, there was a delay either at the supplier end or at the service provider. Some reason, the promised scheduled date happens to be, say, March 2020. This material, January 2020, this material was reached on, say, Jan, Feb, March, April. So by end of April 2020, the material have reached. So here, this particular assessee would like to not claim the goods. He doesn't want to make the payment of duty. Can he do so? If he wants to do so, what are the provisions? Will the customs authority keep quiet on that? Right. This is one particular example. There's a movie called Badmash Company. I don't know how many of you have seen this particular movie, Badmash Company. Shahid Kapoor happens to be a leading role in this particular company. Couple of provisions are picked up from this customs provision in terms of this damage or defect in the goods. When I go to the respective slide, I'll explain the provision, how this mechanism of giving away title to the goods happens. So there is a mechanism for this particular aspect. So when I go to the respective provision, I'll give you what happens here. And by the way, students, all these examples are marked as 3D questions for 4 to 5 marks in your examination. Please keep in mind the examples which are there in your institute material. These are the examples which are going to be tested in your examination. So be sure with the concepts. Not much complicated, very simple concept. Next example. Mr. A has imported a consignment of steel scrap during November 2019, where the government has prescribed customs duty at the rate of 5% on such scrap instead of a regular rate of 18%. Now, this is a trade secret most of us don't know. I don't know how many of you have done the assessment of your client, especially the manufacturing companies. These scrap dealing companies, the companies who are into collection of scrap, segregation, and dealing with scrap, those business you should see, they have enormous transactions of import and export. So this particular example, the scrap which is regularly sold in India attracts 18%. But there was a customs tariff act which has prescribed that any steel scrap which is imported will attract 5%. Considering the competitive price and beneficial interest on such scrap sold in domestic market, this particular A has placed an order for 2 more consignments during December 2019. So November, when he has imported, the local domestic area rate is 18%, but imports rate is 5%. Government having identified the lacuna in the exemption notification, what they have done, they have withdrawn such notification. On the day the above 2 consignments have reached Indian territorial waters, the day the consignment has reached the territorial waters, the Customs Department have amended the exemption notification. Examine the right casted upon the assessee. Now, when I say right, promissory estoppel. Can I challenge this particular exemption notification in Supreme Court, saying that, my lord, when I have purchased, there was a notification issued under a tariff for the particular period. Based on that particular tariff notification, I have imported the material. The day the consignment has reached the Indian territorial waters, the government of India has amended the exemption notification. So this particular assessee, can he challenge the act of central government? So here, examination, there is one question where they test you on the benefit given under exemption notification, and can there be a challenge of promissory estoppel? The term, technical term, promissory estoppel. It's a contractual contract act guiding principle. So when this particular assessee has imported with a good faith, saying that this notification is valid for a month of, say, December, and by sudden act, government has withdrawn that notification. So this is one particular question which you can expect from your examination. Again, answer to this I'll be giving in end of this class. Now, this one slide I have put for your food for thought. So as a student, when you learn this particular subject, what is that expected from me? The material which is there is looking at you as a young chartered accountant from this point of view. Mr. Y, a professional chartered accountant, has been appointed by a manufacturing entity towards examining their business operations and providing consultation on some of the operational aspects of the business. Possibility to reduce working capital exposure. Deferment of payment of customs duty till the orders are received by the customers. Exposure of duty on goods re-imported for deficiency in performance. Last and final, eligibility of duty drawback on encashment of GST accumulated on account of purchases. So these are certain expectations what businessmen have on the professionals like you in terms of the knowledge what you gain out of your curriculum. One aspect, students, please keep in mind, working capital management. You will learn a lot once you get into industry. Example, sir, when I file my bill of entry, I pay my customs duty. Is there a mechanism that I will not pay customs duty upfront? Let me pay after a credit period of say 15 days. There is something called star 5-star accreditation. So once I get an accreditation, once I file an application, I get some benefits of fast track clearance. Second, pay the customs duty after a point in time. Is there a mechanism? Yes, definitely. Is it linked with your turnover? There are few benefits which are linked with turnover. There are few benefits which are not connected with your turnover, but rather with operations per se. So this working capital management is something you learn a lot of organization who are into manufacturing, who are into regular import and export business. So for those business class of people, I would recommend, please get into this particular practice. And let me tell you, it's a fancy, promising career for the simple reason, not many professionals are into this line of practice. So with this few initial thoughts, let us get into our topic for today's discussion. Now, aspects of customs law. So when we talk about this customs duty, this is something which is not there today. This has been there from the ancient time. When you travel back in time, this Kautilya's Arthashastra, when you would have read this Kautilya's Arthashastra, there was a point of taxation where offerings were given to the king to please the king per se. And when you think of East India Company, they have started their point of entry into India by way of a trade. So they used to come to India with their textile products, and they used to take back this what you call pepper and other the basic pulses of Indian culture. So this is how the trade started. So whenever we talk about customs, this is the expectation. When someone comes out of a territory, when someone is going out of the territory, so there is a mechanism to please the government or the person in charge of that particular territory. So over a period of advancement in our establishments, we have come with this today's thought process of learning that any territory, any particular nation, they have their own bylaws, they have their own laws. And these laws should have a harmony with the international trade practice. In the next chapter, when I go to my classification of duties, imposition of anti-dumping duty and all, I'll give you certain treaties, backdrop of how the nations decide, think and come together to decide how to formulate laws in relation of international trade and practices. So with respect to the basic aspect, customs, this is a basic understanding. Whenever goods get into a particular soil, the territory of a nation, tax is collected on those goods by way of a entry, permission given to the goods to come into the Indian nation. Now, this particular Customs Act, as I say, this has been formulated in the year 1962, replacing the old act called C Customs Act 1878. There's one more act called Customs Tariff Act 1975. So customs law, we will read two acts, unlike your GST law. GST law, I have CGST, SGST, UTGST. CGST, SGST, UTGST. All these three have a replica of same sections, replica of same provisions, right? Now, under customs alone, my administration is done under Customs Act. My rate fixation, that is determination of the rate duty payable, is as per Customs Tariff Act. So I have to read these two acts together harmoniously for determining what is the levy. Now, this customs law, what have done? It has replaced all the existing old laws like Sea Customs Act, Inland Bonded Warehouse Act, Land Customs Act. All these particular provisions were taken over or merged together to formulate this act called Customs Act 1962. This is just a history. Examination, don't expect any question from these particular aspects. Now, Coming to the crux of your authority, any law which is vested to a particular government, could be a central government, could be a state government, or a union territory. Any law to be formulated for the purpose of collection of taxes. Article 245 is the root. This particular Article 245 gives the authority for a particular state or the government to formulate taxes. Example, Motor Vehicle Act, profession tax, your your revenue tax, your wealth tax, which was abolished, which is no more, your income tax, your GST. Whenever we talk about a particular taxation, the authority for that taxation comes from Article 245. This particular Article 245 gives the power for making a law to both Parliament, that is the government at center, and the legislature of a state. Now, when I say Parliament, this embodies under itself the power to formulate laws in relation to union territory. Example, Daman and Diu, your Delhi, all these union territories have been formulated by Parliament to make the acts. So this is the first and foremost. I don't know how many of you read appeal. Whenever you read income tax appeal or your GST appeal, somewhere we quote the territorial jurisdiction under Article 245. One classic example, when we were talking about reverse charge mechanism, I have given example of Mohit Minerals. In case of Mohit Minerals, this Article 245 was challenged before Gujarat High Court. What they have said, my dear officer, look, you have formulated a law for the purpose of payment of tax under reverse charge. In case of Mohit Minerals, it so happened that when the goods reach the customs station, at the customs station, I offer a value called your cost of goods, your insurance, your freight. These three elements were considered for the purpose of customs duty and also integrated tax, IGST, integrated goods and services tax, along with the compensations. Now, under customs law, section 12, when we are going to study in a while, there was a customs duty already paid on my transportation. The same transportation under GST law, they were planning to levy tax under reverse charge. So that particular element of levy was challenged, referring to Article 245. What they've said, my lord, the government of India, that is the union government, customs duty is governed by the laws made by Parliament. GST is governed by a concurrent levy under state and the union, that is the Parliament. So for two particular laws, there was one particular transaction called freight charges. When I paid at the customs duty, which was levied and administered by the customs authorities, why at all I have to pay that particular tax? And by virtue of distribution of taxes between center and state, when I have paid IGST, 50% goes to the central government, 50% comes to the respective state government or union territory, again back to central government on the basis of the importer. So when they have received the tax, again there is a jeopardy, that is levy a tax twice. This was a levy which was challenged under Article 245. And at the same time, this Article 245 says that no law made by the Parliament shall be deemed to be invalid on the ground that it would have extraterritorial operation. Now, imagine a situation of your OIDAR, Online Information Database Access Retrieval Service. Now, what is happening? Imagine Netflix. Now, there is a service provider who is there in non-taxable territory. My GST laws were formulated by, it's a concurrent levy by states and the union. They have formulated a law on a particular person who stays in a non-taxable territory. So Article 245, no person in India can challenge Article 245. Say, OIDR, you're taxing a person who is there in non-taxable territory. So this particular mechanism of taxation cannot be challenged. So my Article 245 says that none of the laws which are framed by the Parliament shall be deemed to be invalid. Why they are saying invalid? It is having extraterritorial operation. For a moment, Netflix happens to be origination from US. So a person who's rendering services from US to a particular nation, those particular entities were extended to be taxed in India by invoking a provisions by Article 286A when we read this interstate supply. So Constitution has given authority for the tax maker to have this overriding provision. Now, if this provision was not there, many of the businessmen who are getting benefited from India would enjoy non-payment of taxes. You have this income tax section 9 where we study on your residential status. So those are the provisions which have been given power under Article 245. Next, Article 246, which gives a law for formulating the statutes by Parliament and legislature of state jointly, means like independently and also jointly. So as of now, we have three lists: union list, that is list 1; state list, that is list 2; concurrent list, that is list 3. Union list, example, central excise on petrol and diesel, or your customs duty, that is covered under list 1. List 2, property registration, revenue tax. Like when you have any purchase or sale of immobile property, I pay something called property tax, which is under the jurisdiction of a state authority. Another example, profession tax. Any assessor who's doing a business, they pay a tax called profession tax to the respective state authorities. Third, concurrent list. Concurrent list where both center and state have a authority to levy taxes together. Earlier, we had this VAT and CST, central excise. The goods which have been manufactured in India, they suffer central excise levied by union, VAT or CST, which is governed by the state authorities, right? This is called concurrent list. So as of now, Article 246, which gives authority for both center and state, that is union and state, for having a levy of taxation. Now, moving on from here, this one definition called assessment, I'll stress a little bit for you to understand. Whenever we talk about customs duty, whenever we talk about valuation, this particular one definition has got a beautiful way of explaining entire your Customs Act read with your Customs Tariff Act. We'll spend 2 minutes at best on this particular definition to understand what it explains. Assessment means determination of duty, determination of dutiability. I or the officer concerned in the process of assessment, self-assessment, provisional assessment, protective assessment. So what they do, they want to determine the test of dutiability. Dutiable, non-dutiable. Why dutiable? These are the goods which are subjected to customs duty. Non-dutiable. Why non-dutiable? It doesn't fit the definition of levy. So I ascertain the process of assessment, the element of dutiability of any goods, Now, look at the point over here. When we read GST law, we were reading something called taxable person. We were reading something called registered person. Under customs law, we wouldn't touch upon registered person, taxable person. We prima facie deal with goods. The element of levy is attached with goods rather than a person. This is a thin line of difference between my customs law and GST law. So here, assessment is an element of determination of dutiability of any goods and the amount of duty. So having determined that it is dutiable, amount of duty. Now, how do I find out the amount of duty is on the basis of ad valorem, that is on the basis of value. Is it on the basis of length? Is it on the basis of mass? I refer to something called Customs Tariff Act. So first I'll check the levy. If levy is triggered, then I'll go for CTA to determine what is the amount of duty. Tax, cess, or any other sum so payable. Now the beauty here is, in addition to customs duty, there is a levy of tax or cess which is imposed under IGST laws. So if I have any goods which are dutiable under IGST law, the tax under IGST Act is also levied parallelly by virtue of customs. When I go to section 3, the next session, we will understand what are all the components of my customs duty. When we say customs duty, is it the customs duty alone, or there are any elements of taxes together? So under customs law, I pay duty. In addition to duty, tax. In addition to tax, cess if it is applicable. DTC. Customs duty, taxes under IGST law, compensation cess under IGST law. Right? If any, under this Act or under Customs Tariff Act or any other law. When we talk about any other law, generally we refer to IGST laws. I refer to IGST provisions. Why we are doing that? I'll give an example. So why we cannot levy customs duty alone? Why are you talking about IGST and cess? Let's take an example. Say Naveen and Namita. Let's take two people. Namita happens to be a manufacturer in India. Namita happens to be a manufacturer in India. Naveen happens to be a trader. If Namita has to, like, let's take example of this LED TV, LED television. If Namita has to manufacture LED, she has to procure the components. She has to import some of the components. She has to do assembly, and then she has to sell in India. Now, the same element, if Naveen has to import, now most of us know that all electronic gadgets get very dead cheap price from China. So don't take it otherwise, Naveen. I'm just giving an example, right? So assuming for a moment, Naveen has to import this material from China. Now, from China, if I import the material, say, let me come back to Excel file to give you a better understanding on this point. Let me come to my Excel file. Manufactured in India, imported. Raw material cost. Then I have assembly, then labor, then taxes. Total. Assuming my raw material cost, say per TV, I'm talking about manufacture of here, activity, manufacture of LED TV. Now, raw material cost, it is say 25,000, assembly 15,000, labor some 8,500, and taxes on that. All these components, assuming that I pay 18%. Though there are 12, 18, etc. I just take a rough example. Now, this happens to be the cost which gets attracted in India. Now, assuming that this particular television I have to import, I may get it at say 25 to 30,000 cost of economy. Now, there are components like you have cheap labor, you have various benefits which are given in a particular nation. Now, assuming for a moment, if I have additional information like this, items are imported with customs duty of say 12%. So when this particular manufacturer has to import this material, this particular manufacturer has to import this item. If it is procured locally, it would have cost some 28,000. The quality may not be up to good. And this component, if I have to import, I would have to pay customs duty. Now, this particular gentleman, he is just importing at 30,000. Now, the tax makers have to make a level playing field. The tax makers have to make a level playing field for whom? For this manufacturer and this particular importer. So here, this particular manufacturer pays customs duty, pays the respective taxes, pays the Indian taxes. So if this particular gentleman who is importing, if he just pays the customs duty, all the taxes which are applicable in India doesn't get attracted to the trader. So to make a level playing field, this particular customs law brings this particular fact that they have to pay something called your customs duty. You have to pay something called your taxes, that is under IGST laws, and also compensation cess, which is prevalent. So this is a mechanism where I bring all the taxes on the import aspects, considering the domestic business. Let's take another example. Most of you know, you take example of your textile industry. Now, textile industry, there is something called your washing, dyeing, and giving color, and then ironing. I need to have power consumption. Now, for a moment, assume that this particular unit gets its power from the local power discom who distributes the power. And there is something called electricity tax. For a moment, instead of buying the power from discom, I go for in-house captive power consumption. What I do, I have a boiler. This boiler gets the gas. This particular gas is subjected to customs duty and also to say excise duty. For a moment, just for understanding purpose. Now, customs duty and excise duty is something not symmetrical. It gets into the component of my costing. Now, to have a level playing field, they understand all the business and then they bring into the mechanism called ascertaining the duty, ascertaining the amount of duty. Now, for this, we refer to Customs Tariff Act. So, I understand the provisions of Customs Act. I understand the provisions of Customs Act. That is, when I say under this act, first and foremost, was there a levy? To understand this aspect of levy, Section 12 deals with that. Once you say it is levy, then what is the duty to be payable as per Customs Tariff Act? I also look into other laws. This is a basic point why we need to talk about assessment. Now, in the process of doing this particular assessment, the first element I do is classification. Classification of such goods. Third session from today, the third class, I'm going to touch upon the classification. So for a moment, when I import a particular pen, it is important for me to prove to the authorities concerned what is that I have imported. Now, say Priya comes to the customs authorities and says, sir, I have imported pen. So customs authorities feel that, okay, Priya has imported pen, let me charge 12%. But Priya has actually imported a pen which has got an electronic chip, which has got a torchlight, which has got a recording, a device which has a memory to record. When I speak, I just keep the pen over here and I go for a particular interview. I go to a particular businessman. My pen has a capacity to record everything. Now, when Priya goes back with all these facts, is this a pen or is this an electronic device? If I say it is a pen, 12% is a customs duty. If I say not a pen, rather an electronic device, I have to pay 28%. So first element, once I ascertain that there is a levy, once I know what is the amount of duty, I go for classification. Now, this amount of duty is dependent upon the element called classification. So first I have to find what is the goods I have imported. Moving on further. Value of such goods as determined in accordance with the provisions of this Act and Customs Tariff Act. So here I decide, once I know what is the nature of goods, value. What is the value for those goods? For few goods, I just go on the basis of my product. Example, cigarette. When we talk about tobacco products, my value for tobacco products is not on the basis of MRP. The value for tobacco products is on the length. So if a tobacco product is having so much of length, this is the value of duty you have to pay. Gutka, pan masala. So there are a few products where the mechanism of determining value itself is altogether different. So, I have checked the levy, I have understood classification, I also did my value ascertainment. The next element comes into picture is availability of a exemption or concession duty. Availability of an exemption or concession duty. This is another important element what you have to keep in mind. Sir, I have imported a pen. When this particular pen has been landed due to excess baggage, due to excess weight, there was a bend. Now imagine your laptop. When you have a laptop, when there is a laptop has got say 1.5 kgs is the weight of your laptop. Now it is packed in a box, one upon another. I have a stacking mechanism. 10 laptops have been stacked together. Standard stacking is say 5 laptops. Now this particular shipper or the particular person who is dealing with this particular process of consignment, he has stacked one upon another. There is something called damage. So I have material which got damaged because of the goods which lose their characteristics. So a pen which was imported, it has a break. A pen which is imported, it has got some sort of malfunction because of customs handling. So I examine whether there is a exemption, whether there is a concession. Example, a car, a brand new car. Sir, I have imported a brand new car. It was packed neatly, but there was scratches on the bonnet. There were few scratches on the glass. There is a small break. Now, this particular car, which is worth say Rolls Royce like 2.5 crores, because of the damage, the value is depreciated by 20 lakhs or 25 lakhs. So, can I examine that there is an exemption notification for this particular aspect? The examination, this is one question which will be tested. I believe June 2021, there was one question in relation to this damage. So there is a separate slide where you will understand how I can claim an exemption from the particular point of payment of taxes. Once this particular exemption notification under this act or customs tariff act. So this is my next duty, right? So first levy, then I'll go for finding out the duty on the basis of classification. I'll also find what is the value. I'll see if there is an exemption notification. Moving on further. This particular assessment says that, look, I do the value assessment on the basis of quantity, on the basis of weight, on the basis of volume, on the basis of measurement. There could be multiple parameters or other specific rates such duty, taxes, or any other sum is leviable on the basis of quantity, weight, volume. So these are just some of the parameters. Like example, sir, I have imported mercury. Now everyone know that mercury is one of the finest metal which is which is not easy to carry. It is in a liquid stage. Wherever you put, it takes the shape of that particular component. So there is a different mechanism how I identify on the basis of weight, on the basis of volume, on the basis of measurement. Like example, LPG. You have gas which is imported. I don't know how many of you have seen this industrial gas. When COVID second wave, we have seen a lot of places where there was a acute shortage of oxygen. What we have done? We have imported oxygen. How do we measure the oxygen? On the basis of volume, on the basis of weight. So there are few components, though they are classified as goods, it doesn't have quantity, it doesn't have weight, it may have a volume, it may have a mass. So there are different mechanisms for different products. Then this is an important aspect. Origination of such goods, which is determined in accordance with the Customs Tariff Act or the rules made thereunder for determining duty, tax, cess, or other sum on the basis of origin of such goods. Now, every nation has got their own choices how to encourage the business, how to regulate the business. I hope you have read something called Competitive Commission of India and FERA, Foreign Regulation Act. Now, FERA regulates what money can come in, from where money can come in. Competitive Commission of India regulates how business has to function. Similarly, Customs Act also has their own choice to see from where these goods are originated. Should I encourage? Should I discourage? Example for economic interest. So there is something called dumping. I believe you would have seen this particular concept of dumping in many movies. This concept of dumping is to kill the market. There is a practice. Unfortunately, like example, a particular foreign entity from a particular nation, let me not name the nation, otherwise your attention goes to something else. From a foreign soil, if someone comes to India to start a business, they establish something called a subsidiary. This subsidiary becomes a base for importing all the material from that nation to kill the market. This particular case happened in case of your steel, iron, and recently, if you have to see, this particular anti-dumping duty was imposed on food products, potato and onion. There are few items which have an impact of completely ruining the industry. So the government has a choice depending on the origin. Second session, I'm going to explain you anti-dumping duty. Anti-dumping duty, ADD. I choose to levy anti-dumping duty on the basis of place of origin. Now, these traders are so cautious. Unfortunately, let me name this example. COVID time, there were rubber tires which have been imported from China for the simple reason it is very, very economical compared to the tires which are manufactured in India. A four-wheeler, when I have to buy a tire, it may cost me 5,000. The same time, if I have to import from China, it costs me only 2,000. Why? Because of your dumping, because of some other trade practices just to kill the market. Now, to protect the interest of the trade, government may decide on the basis of origin what kind of duties to be levied. So this is a choice again that government has got with, right? This is my next element. Third element. Let me just clear this. Any other specific factor which affects the duty. Now, government from time to time may formulate how to determine my duty. So this is a hierarchy. Assessment, this particular definition explains me the flow of my assessment, levy, assessment, and valuation. All these three elements are covered in this particular definition called assessment. Examination, expect a 2 marks question from assessment. And this assessment includes provisional assessment done by the department, self-assessment done by the importer, reassessment done by the department, any assessment in which the duty assessed is nil. So these are the mechanism of assessment which happens in case of my goods which are imported. Bill of entry. Bill of entry is a permission under section 46. I'll take your minute of time to make you understand here. Bill of entry is a formal, what I can say, intimation. I intimate the customs authorities that, my dear officer, look, I have imported so-and-so material. Please permit me, please grant me to clear this material for consumption in domestic tariff area. DTA, domestic tariff area. Goods which have been imported, I file an application under section 46. Section 46 is a mechanism where I go to the customs authority saying that, my dear officer, this is the invoice. I have imported this material from Japan, from Singapore, and this particular invoice is belonging to me. So this documents I'm going to furnish to you. On this date, you give me a permission. And this is my classification. Central excise, customs tariff classification, rate of duty applicable, any exemption notification prevailing under foreign trade policies read with my customs law. Do I enjoy any concession rate because I'm a SEZ, I'm a EOU, I'm a EHTP, I'm a STPI. All these are facts I mentioned in my bill of entry, and I seek a permission for importing the goods into India. So whenever I talk about import, students, please remember this term called bill of entry. It is a formal entry of goods into India. Bill of entry is a point where my levy gets determined for payment of duty concern. Next, moving on. Customs area. This is one area where it could be a customs station or it could be a warehouse. Like any area which is bonded, which is meant for customs. that we can call as a customs area. So this includes customs station. When I say customs station, this includes your sea, air, land. Customs station is the place where generally goods are brought in for import or export purpose. Warehouse, where a permission is taken for the goods which have been imported. I don't get into my factory. I keep in a bonded warehouse. So this is one concept I draw your attention. Maybe third or fourth session, I'll explain in detail what is this warehouse. This is my definition of customs station. Dutiable goods, the goods which are chargeable to duty, on which duty has to be paid. Duty, customs duty leviable under Customs Act. Entry, it is in simple terms, it means the entry made in bill of entry into India. Shipping bill, the bill which is carried by by way of conveyance. Bill of export for your export related aspects. Shipping bill in relation to your goods sent by sea. Bill of export in terms of air. Examination, this is what I was telling. Expect a definition on in India. Expect the definition of India read with territorial waters. 3 marks is one question which would be tested. India includes the territorial waters of India. For territorial waters, there is one definition in your institute material. Yeah, page number 1.7, students. Look at your page number 1.7. Meaning and significance of territorial waters of India. Now, this is one question, a definition for 3 marks from your final you can expect. India includes territorial waters. Very simple definition. What is territorial waters? As per territorial waters, it includes continental shelf, exclusive economic zone, and other maritime zone. Territorial waters of India extend to 12 nautical miles. Use your pencil, underline 12 nautical miles into the sea from the baseline. Now, this particular 12 nautical miles is important. Just visualize when I explain this particular example. I go to a sea. From the baseline means from there is a soil. From the edge of the soil where you feel that. Now, from here, the sea water or the ocean it starts. From there, 12 nautical miles into the sea. The place where you feel that soil gets over, from there, where the land gets, your imaginary line gets into 12 nautical miles. Now, if you happen to watch movies, whenever a boat is coming, they say, I'm getting into so-and-so jurisdiction. Like India, we have this 12 nautical miles. Every nation has got this imaginary line. Means from the seabed, from the sea soil, I imagine another 12 nautical miles, which is the imaginary line. Whenever a boat comes into that territorial waters, they're bound with the customs laws of India. Now, a boat which is coming from Sri Lanka, they cannot say, sir, by mistake, I don't know the navigation, I just landed in Indian territorial waters. The moment they come into territorial waters, they're bound to get the permission. If they don't take a permission and they just get in, it's called violation of your laws of that particular nation. So every nation has got this imaginary line called 12 nautical miles. Goods are deemed to have been imported if the vessel enters the imaginary line on the sea 12th nautical mile. This is what I was explaining now. Yeah. So this is one definition. Examination, please expect one question. Warehouse includes a public warehouse, private warehouse, or licensed warehouse. This warehouse alone, I'll have a separate session with. I'll explain in detail the concept and why is that important. Before I come to Levy, let me just see if there are any clarifications from the discussion what we had so far. Namita is asking this question. Sir, in this definition called customs area, customs station, she's asking, sir, in customs area definition, What is the other area where goods are kept before clearance? Now, imagine this particular case, Namita. Say generally, when the goods are meant for export, when the goods are meant for export, or when the goods are meant for import, at times it so happens that, like your Indian Railways, I have one train coming at 12 noon, another train which is supposed to come at 10:30, which is also seeking permission at 12 o'clock. So what happens here? I allow the one train, and I, with a small gap, I allow the other train. So here, maybe space constraint. The customs authorities wants to have material stored at a particular place, which is earmarked for customs purpose. That's called other area. So this is an area designated just to have a temporary storage. The goods which are going out of India, the goods which are coming into India. So this is a kind of temporary storage within the bonded premises. This is called other area, Namita. Namita is asking this question. So when I have to imagine this 12 nautical miles, is this a line, line in shape, or it is a circle? Now, it is like a circle. Like when you imagine your Kanyakumari, you will visualize that from any land soil, you'll just you will visualize that U-shape 12 nautical miles. So any goods which are coming, I have to, from any soil bed, I'll imagine the 12 nautical miles. So as you see India shape, so I border myself with the 12 nautical miles from the sea soil. Next, moving on. Now, levy. Levy is a point where a liability has to be declared. Means I have to say that I have to pay my customs duty. So levy determines that am I liable to pay duty, am I not liable to pay duty. Example. When we talk about levy, say Priya has imported one particular consignment from Singapore. Now Priya said clearly, look, I am going to make the payment if you make the availability of goods in a span of 12 weeks from the date of order. She placed the order. From there, 12 weeks is the time within which the goods have to be available to her at the customs port. Now, Priya has got an intimation that the goods are made available on the 15th week. Now, the day the goods have reached, Priya decided that I don't want those goods. Now, those goods which are abandoned, the goods which have been declared that I don't want, those does not attract duty. Reason, the goods which have reached has no intention of clearing. If the goods are meant for taking back, I would say that there is no duty applicable. The goods have come, it is going back without getting into the Indian soil. So this is one example. Second example, goods which are meant for your military or defense, navy, those goods have a specific exemption. So goods which have been like your arms and ammunition, goods which have been imported for a particular purpose by defense, it is not leviable to duty. Assessment. Once I know that these are the goods which are liable for duty, I get into the process of determining the duty. Classification, valuation, then exemption notification kind of thing. Then finally, collection or payment of tax. So these are the three steps which happens. First, is the duty applicable? Second, what is the rate of duty and what is the component of duty? Third, when I have to pay the duty. I'll give another example. So I have imported 10 pens. I have imported 10 pens. Now, when these pens have been cleared by the customs authorities, actual assessment has to be done. They have noticed that as per invoice, 10 pens are there. Imported is 10 pens. But when customs authority has to pass an order, only 8 pens are there. What happened to the 2 pens? 2 pens are missing. 2 pens are missing. Then I would say there is no duty on those 2 pens. So what happens here? I, as an importer, when I go for payment of duty, should I pay duty on 10 pens? Should I pay duty on 8 pens? Why I have to pay only on 8 pens? Because the 2 items are missing. So levy is not applicable. Levy is applicable only when the goods are there. So when the goods are not there, where is the question of levy, right? So the element of levy comes on the basis of the goods. Then I'll ascertain whether the goods are the duty is payable on the basis of the purpose. I'll see when I have to pay my customs, when I have to pay my duty. Now, when I talk about my payment of tax or duty, this is applicable both on imports and exports. Now, I import the goods, I pay customs duty or tax. I export, I pay customs duty or tax. So there are few goods which are demerit goods. I call demerit goods. When these goods are exported, government doesn't want those goods to be exported. So they levy customs duty for the purpose of making it less cheaper or less economical in terms of their functionality. Like example, there is a acute shortage of onion. There is a acute shortage of potato or rice. A trader is willing to export those items which are of death need to the nation. So what they do, they have something called protective duty. They levy 200, 300, 400 times of the value of the material. Why they do that? To protect the interest of the nation. Example, your N95 mask, March 2020 till June 2020. We have seen many notifications which have come where they have levied the customs duty on export of mask. Now, N95 mask is a commodity which is of very important to India. Now, when they permit these goods to be exported, what happens to the Indian citizens? So, government may formulate rules for levy of duty both on imports and also on exports. So, this is the basic aspects of how I get into payment of duty. Now, this one element I'll draw your attention. When we talk about exemption, can someone challenge why this exemption notification is there? Say steel imported, like we were talking example of steel scrap. Steel scrap which is imported, the rate of duty is 5%. The same steel scrap in India, say assuming 18%. Now, why it is 5%? The government of India has given an exemption notification on the basis of accessible value or no ad valorem value. They say 10% of the accessible value you pay customs duty, not on 100%. Why they do that? The government has got its own reason on the basis of morality or equality, which is purely judgmental by the government. So it is a discretionary power. Any exemption notification, it is a power vested with the authority, that is the government. Control and economic growth. When a government has decided that exemption notification to be given, exemption notification to be withdrawn, it's precisely a decision or a policy making. Whenever matters of this sort are tested in court of law, the High Court or Supreme Court says, look, it is a policy matter, I will not intervene. All policy matters you cannot challenge in a court of law. It is the government who is going to decide. So in a good faith, we allow that to happen. Like when emergency has been casted during Indira Gandhi's time, Supreme Court cannot intervene. Emergency, it is a policy matter decided by government, that has to be implemented, right? But rather, when few constitutional aspects were altered, then Supreme Court intervened saying that, look, Constitution is the base fundamental rule that you cannot alter. Like Kesananda Bharati's case, when they made an attempt to change the Constitution, they say, no, it is not vested with the government to change the law. Just because you have a right to formulate the rules, you cannot change the Constitution to your will and wish. Customs duty, as we have discussed, is on goods and not on person. Customs duty is on goods and not on the person. Like example, Priya. Priya has imported the goods. Priya has waived off her right on those goods. Authorities will not demand Priya because Priya said, look, the consignment has come, I'm not willing to take the consignment. So once she waives off her right on those goods, a title to those goods, the duty is levied only on the goods and not on the person. This is the change point. In case of a GST, taxable person, registered person, I refer to a taxable person. In case of customs law, I just look at the goods. Where are the goods? What is the point of levy? That's all. Now, Section 12, this is the root of my levy. That is called charging section. So charging section says that there shall be levied the duties of custom shall be levied at such rate as may be specified under Tariff Act and any other law for timing in force, where on goods imported or exported into India from India. So Section 12 clearly says that, look, I refer to Customs Tariff Act. Also, I refer to other laws. What is the other law timing? IGST law. On what? Goods which are imported, goods which are exported. So as I say, two aspects can be subjected to customs duty. The provisions of subsection 1 shall apply in respect of all goods belonging to government as they apply in respect of goods not belonging to government. Goods belonging to government. So what they say, look, I'm not bothered whether the goods are brought by defense, whether the goods are brought by Praveen, goods are imported by Namita. I look at the goods. First, duty, is it applicable? If the duty is applicable, that is leviable, then I'll go for exemption notification. This is what they talk about. So they don't differentiate. Is the goods imported by government? Is the goods not imported by government? So there is no general exemption. The moment the defense minister comes in, the authorities comes and say, sir, these goods are meant for defense. They say nothing doing. You first and foremost understand that there is a levy. Based on the levy, if there is any exemption notification, then you claim the benefit of non-payment of duty. This is what they talk about. Imports by Navy or Police, Ministry of Defense are exempt by virtue of exemption notification. Now, this one slide you understand this way, students. I draw section 12, assuming that section 12 is compared with Rama. Now, wherever you see Rama, there are three persons in addition to Rama: Sita, Lakshmana, and Lord Hanuman. Similarly, whenever we talk about levy under section 12, pilferage under section 13, damage under section 22, and lost or destroyed under section 23. These three provisions will go hand in hand. Again, I repeat, whenever there is a levy, the Act says, Praveen, look at these three aspects. Was there any pilferage? Pilferage is a petty theft. Was there a damage? Was there a loss or destroyed? Goods destroyed. On the basis of this activity, you determine what is the duty to be payable. Example, I was talking about this Rolls-Royce car. Sir, I have imported Rolls-Royce car. There was a damage. What is that? My glass got broken. My bonnet got dent. Based on this, there is a reduction in value. So customs authority says, don't worry. Instead of paying on 2.5 crore, pay on 2.25 crore. This is how I read section 12, read with section 22. Lost or destroyed. Goods lost or destroyed. Sir, I have imported a consignment. Because of tsunami, the entire consignment was lost. Example, Chennai. There was no exception when there is a natural disaster. Say there is an earthquake, there is a tsunami or any other calamity. The goods will be lost or destroyed. So there is a fire accident. So some incident happens where the material was burned. The goods have been lost. When the goods are not there, where is the levy? Right? So pilferage. Pilferage is a petty theft. So if there is a petty theft, if there is a damage, if the goods are lost, I take into cognizance these three aspects before I determine what is my levy under section 12. So whenever you remember section 12, please recollect section 13, pilferage, section 22, which talks about your damage, section 23, loss or destroy. Like Rama goes along with Sita, Lakshmana, and Hanuman. So these are the four sections I read together. So this is just a way how you recollect for your examination point of view. Now, for charging, Now, to levy, my levy it tracks only when there is an import or when there is an export. So what do you mean by import? Import, they say, when the goods when I say import, goods are cleared for home consumption. Goods are cleared for home consumption. That is, my import starts when they hit the territorial waters. Like assuming that this is my Indian territorial jurisdiction. And visualize that there is a 12 nautical miles surrounding my jurisdiction. Once the ship enters the territorial waters, once the ship is over here, my import started, right? Once the ship is here, import happened. When the material, say, this is my customs area. This is my customs area. I take permission from customs area and I enter into the land of area. This is called land mass. So when they become part of the mass of goods within the country, so my mere import is not sufficient. What they say? My import of goods commences when they cross territorial waters, but continues and is completed. Look at the term, is completed when it becomes part of the mass of goods within the country. So from customs area, when it forms part of the mass of the goods within that India, then it is called import happen. How does it happen? By virtue of your section 46, where I file my bill of entry for home consumption. Are we clear with import? Students, are we clear with import? Now, this is one important definition where there are a couple of judgments which talks about how we deal with my imports. Let me see if there are any dots so far. Indian supply will be reduced, Nisha Manikandan. Yes, Nisha. Just to protect the interest of India, they impose these particular duties. Good. So far, so good. No questions. Now, moving on further. The taxable event being reached at the time when goods reach customs barrier, they say that the taxable event starts at the time when they reach the customs barrier and bill of entry for home consumption is filed. So when bill of entry is filed for the purpose of clearance to my domestic tariff area, that is the point in time when I pay my customs duty. So the moment, like assuming, sir, when the goods have entered this particular customs area, sorry, before customs area, so the day this goods have entered this particular area, the rate of tax is 18%. And when the goods have entered customs area and I file my bill of entry, my rate of tax happened to be 12%. My rate of tax duty happens to be 12%. Should 18% be applied? Should 12% be applied? Because my import is completed when I file bill of entry or when I take it to my domestic area. This is the point. This is the point. So here they see my import happens when they become part of the mass of the soil of the country. This is what important for us. Now, in this particular case, Garden Silk, page number 1.11. Page number 1.11. What they say? The levy gets triggered. The levy gets triggered when the goods hit the land soil. The Supreme Court has observed that import of goods will commence when the goods cross territorial waters, but continues and is completed when it becomes part of the mass of the goods within the country. So the taxable event being reached at the time when the goods reach the customs barrier and bill of entry for home consumption is filed. Underline with your pencil, customs barrier and bill of entry is filed. So here my levy is completed, my levy gets attracted on the day when I file my bill of entry. Now there is one more point. Sir, I don't clear the material instantly. There is a concept called warehouse. I'll keep in a warehouse. After some point in time, I'll clear from warehouse. So here my levy gets attracted. When the goods are taken out of customs warehouse to form part of the mass of goods in the country. Like this case, say you have this particular customs warehouse and assuming that this is my India. I'm not good at drawing, just assuming that this is India and this is my warehouse. So the goods, when it enters warehouse, I will not trigger the levy. The day from warehouse, it crosses warehouse and it enters the land mass. That is the day when I file my bill of entry. I determine what is the duty I have to pay. Right? So when the goods are kept in bonded warehouse, levy does not get attracted. The day when it is cleared from bonded warehouse to form part of my goods of the country, then my levy gets attracted. So in your example B, beginning when we have discussed, the day when the goods have entered, 18% was the rate of tax. After 3 months, 12% was the rate of tax. What shall be the duty prevail? The day when I have cleared from bounded warehouse, the rate of tax 12%, that should be prevailing. Officer is containing that the rate of duty has happened to be 18%. So you'll say that no, it is 12%. Now, similar to exports, so when the goods cross territorial waters, that is the triggering point for levy. Now, I'll make you understand what is this home consumption and what is your warehouse. Home consumption, that means the goods, when it has been imported, immediately I'll take it to India. That is to form part of my domestic tariff area. I pay duty before clearing the material from customs place. What is the mechanism? I file a bill of entry for taking a permission to clear to home consumption. On the other hand, warehouse. Warehouse is a mechanism where I keep the goods at a particular permitted bonded warehouse where it doesn't hit to the domestic tariff area. It doesn't form part of my mass of goods in the country. And this goods which are kept in a warehouse, the importer is liable to pay interest, rent, and charges for the warehouse for such goods. I'll explain this concept why this warehouse has come into picture. Now, bonded warehouse is a mechanism where there is a space constraint. So I don't have enough space in my factory. I want to have this material. So I use a bonded warehouse with the permission of my customs authorities. I keep the material in warehouse. Whenever I have a production requirement, I move it from the bonded warehouse and I put into my manufacturing process. Take example. You have this electronic components manufacturing. Assuming that these factories operate at a premium location. Now you have to pay per square feet, say somewhere around 250 to 300 rupees per square feet. Whereas in a warehouse, you just pay 50 rupees per square feet. Now you compare the cost benefit analysis and you feel instead of keeping my bonded warehouse, instead of keeping my factory, let me keep it the customs warehouse. Second, non-availability of customs order. Assuming that I'm a trader, I import the material against an order from a customer. In a particular case, the goods which have been imported, customer said you deferred this consignment for 3 months. By the time customer said defer, the material have reached already. So instead of me bringing it to my factory, I'll just keep in the bonded warehouse. This example, most of these traders who operate in a say 50 by 20 by 20 square feet premises. It is a small cabin where they do entire operations. Material comes to customs, They do a high sea sale, or they try and put it a warehouse. From there, they sell to an end customer. This could be a business pattern. What if the goods have been exported to Singapore? There was a small malfunction in this particular goods. Now, those goods, instead of bringing back to India, I just do a small repair and I send it back from the warehouse. Now, if I get to India, I have to pay customs duty, I have to pay IGST. Again, I have to claim a refund from the department. Instead of paying all this, let me avoid those taxes. So those goods which have come for a small repair and it goes back from customs itself. Point number 4. There's a permission given by the customs authorities for this SEZ, EOU or other industry for a particular process where I can do a manufacturing activity called assembly activity in a particular warehouse. Example. So the goods come from USA. Those goods needs assembly, which needs a special expertise. After the assembly, the goods have to go back to Kenya. Now, if I import, I have to pay customs duty. There's a blockage of working capital. Rather, I do a small assembly. Now, there is no wastage. There is no machinery involved. What happens? I get an engine. I get an alternator. I have some what we call consumables. I fix this alternator. I do wiring and cabling, and I make a what we call some DG set. This particular DG set exported to Kenya. So goods are coming from USA to India for assembly. I do that assembly in warehouse and I again send it back. This could be one reason why I think of a warehouse. So this concept of warehouse says that, look, whenever you are getting the goods to warehouse, you are supposed to pay interest. Why interest? Duty is supposed to pay the day material has been cleared. Now, as per the law, 90 days, 90 days is what you have been permitted to keep in a warehouse. If you go beyond 90 days, for that duty, what I have to pay along with interest. And because I've kept the goods in a bonded warehouse, I have to pay rent and warehouse maintenance charges for that particular goods. And this is a permission sought for keeping the goods in a warehouse. Now, there is a special circumstances where goods are imported, re-importation of goods. Why? Sir, I have sent the goods, but some reason those goods are coming back. So should I need to pay customs duty? There's a specific provision under 45 of 2017 where they say any goods which are re-imported, you can enjoy some relaxation. What they say? Re-importation of goods. I have exported the goods. Those goods have been imported. If goods are imported into India after exportation, such goods shall be liable to duty and subject to such conditions and restrictions, goods of like kind and value. So whatever like kind and value is there, that particular duty is applicable on these goods which are exported and re-imported. I'll take you through a few examples. Now, there could be a scenario where, sir, I have exported goods under warranty. I have exported goods which have been rejected by my customer. I could have sent the goods for a purpose of trade exhibition or for a particular display or for approval, sale on approval basis. Now, these are the circumstances where goods which have been exported have come back. Students, please come to page number 1.12, where they have described these transactions. So, I could have exported the goods. Now look at this particular business model. There could be a lot of we have been seeing this corruption. We have been seeing that there is a invoice trading, etc. Now this could be a mechanism where I call this as a window dressing. Where I try to explore the exemption notifications. I try to get the benefits and then get away with the compliances. Then it could so happen that there's something called duty drawback. There is something called exports with payment of IGST. Now, for a moment, I'll give an example of this scenario. Seller and buyer. Seller is in Karnataka, not Tamil Nadu. Buyer is in Singapore. Seller in June 2020 exports with payment of IGST. Now IGST paid, say, 25 lakhs. Buyer is there in Singapore. Now, there is something called Rule 96. When I export this consignment in June 2020, I get a shipping bill. I file GSTR1. I file GSTR3B. Now, what happened here? The goods which have been manufactured are goods which have been traded by a seller is exported in June. If file is GSTR1 in June 2020, say July 2020, GSTR3B in July 2020. And my shipping bill, the goods have left India, say in July 2020. Now there is an auto mechanism, auto matching. GSTR1, GSTR3B is matched and I get a refund of rupees 25 lakh. Refunded. Now, so what if, say, now what is the time limit? 45 days is the time limit. Auto refund. I file my refund, say GST returns on 20th July 2021. Within 45 days, I get a refund on what day? 3rd September. So here, I have exported the goods and filed my returns. I got my refund 25 lakhs on 3rd September. Assuming that 30th September, customer rejected the goods. Now, imagine this scenario. The goods which have been exported to Singapore, those goods have come back. And those goods I sell in India with payment of GST. Maybe for like assuming 25 lakhs is the tax value. Taxable value happens to be 138 lakhs. Now, this sale value this is a consignment which I have to sell in India. Now, instead of selling for 138 lakhs, I could have sold for say 100 lakhs or 85 lakhs. And I would have paid customs duty only on that. Now, in this entire process, please imagine what is happening. I got a working capital, that is, where is that? This money of 25 lakhs came back into my bank account. Later, I'm selling this goods of 85 lakhs, paying 18%. I collect from customer 15 lakhs and I pay to government. Now, in this entire transaction, imagine what is happening. For doing export and import back, I'm paying something called, I'm getting a refund called 25 lakhs. Now, isn't this a kind of trade practice which is unhealthy trade practice? Now, to curb these practices, this notification 45 of 2017 has come into picture to address all these circumstances where goods have been exported and imported for the purpose of either rework or it is for any other reason, right? Look at your page number 1.12. Concessions given for duty payable in case of re-importation of goods exported under duty drawback, exported for repairs, etc. Now there could be genuine, there could be ingenuine exports. So first, let's look at your exports for sale and those goods which have come back. So goods exported under claim for duty drawback, for refund of IGST, under bond without payment of IGST, under duty exemption, that is DEC, duty exemption scheme or advance authorization. So various mechanisms. So in this case, what they say, Praveen, whatever benefit you have enjoyed, look at your other column, amount of incentive availed at the time of export. Now, this is the amount of import duty that a particular person has to pay. Because you have not paid any duties, you have rather got a duty drawback, you have got a refund. This particular amount has to be paid back with interest. This any amount what I have to pay but not paid. Example, sir, this case, assuming that it is not export with payment of tax, it is export under LUT or bond without payment of tax. Now, government says, Praveen, you have enjoyed the LUT or bond. Now you pay the corresponding IGST when the goods have been imported. Reason? The time when you have sold the goods, you are supposed to pay IGST, but you haven't paid IGST. Now, because you are importing that, you pay better IGST and get those goods clear. This is what happens in case of a goods where there was a benefit of export duty drawback or your IGST pay or exported at LUT or bond or EPCG or duty exemption certificate. All those benefits what you have enjoyed, you're not entitled because those goods have come back. This is what notification 45 talks about, your payment of customs duty for the benefits which you have enjoyed. That means when those goods come back, I forego all those benefits. Examination, one question. Mrs. XYZ Limited have exported goods with payment of IGST in the month of June 2020. These goods have come back in the month of September 2020. Examine the relevant provisions for payment of customs duty. So here what you will say, goods exported have been re-imported under notification 45 of 2017. The XYZ Private Limited have to pay the corresponding IGST, what they have claimed as a refund at the time of export. This is your answer. Point number 2. Goods other than those falling under serial number 1 exported for repairs abroad. Sir, I have second scenario. Now, most of us come across this scenario. It could so happen that I could have purchased a machinery, plant and machinery. At the time of installation of plant and machinery, there is some malfunction in the engine or some part. Now they have imported that part, nothing is happening. So they wanted to call back that particular machinery. So this machinery which is under, or that part which is under warranty, that goes for what you call repair. Now what they say, duty of customs which would be leviable if the value of re-imported goods after repairs were made up of the fair cost. Please use your pencil. Fair cost, repairs carried out, including cost of material and insurance and freight. Now, what they say, plant and machinery were, say, 25 lakh was sent for repair. So this is under warranty. Customs authority says, Praveen, I'm not bothered with your warranty. You give me the cost of these activities where there is a valuation. Sir, I have got it repaired where the cost of repair happens to be somewhere around 8 lakh. I have paid as the cost of material. Insurance, I have paid 45,000. And freight, I have paid some 1,25,000. So they say, look, this is the cost of valuation happened. The material which is went out for 25 lakhs, when it has come back, this total of 9,70,000 is a valuation on those repairs. Praveen says, sir, this is a warranty item. when this machinery has come back, whatever machinery they have promised, it has come back. Now they say, though you have not paid anything, the value addition, what has happened on that, you pay your customs duty. So the provision says that pay duty on this notional value addition. So how much you have to pay customs duty? Assuming that duty is 12%. Such there is something called social welfare cess. Say it is at 10%. So they'll say notional repair value. My notional repair value happens to be 9,70,000. Examination, expect a 2 marks question for on the basis of this calculation. My duty happens to be 12%. And on that 10% surcharge. Now, this becomes my total for IGST. So on this particular customs duty and on this, now this is a value which I will be considering for the purpose of levy of my customs duty. They say that, sir, I have paid customs duty. I also have paid welfare cess. Good. Now, please consider this for the purpose of payment of your IGST. Assuming for a moment my IGST is chargeable at the rate of 18%. On this 10 lakh, I'll pay 18% as IGST. Therefore, total duty payable. My total duty payable shall be 1,16,000, 11,000 plus tax of IGST, 3,25,687. This would be your answer. In case of goods which have been imported after repair, the provision says that though you have not paid a money, look at your page number 1.13. Whether such costs are actually incurred or not, insurance and trade charges both the ways. Both the cases, I have to pay this particular duty. So examination, 2 marks question. In case of goods which are imported for the purpose of repair, please expect 1 question. Now, third element, other than category 1 and 2. Like I gave example of your trade exhibition. Sir, I have sent these goods for trade exhibition. It goes to abroad, it just participates in the exhibition, then it will come back. What I have to do? Now, a food for thought, students. Say there is a trader in Karnataka. This exhibition happens in, say, Singapore. Now, when the goods are meant for export, is there a supply? Is there a supply? Second, is there a consideration? Is it meant for transfer of title to the goods? Answer is no. Is there a consideration? No. Is it meant for, is it bound to destin there or it is going to come back? So it is for trade exhibition, it's going to come back. So because it is not a trade exhibition, there is no bond or LUT. Also, there is no payment of IGST, right? Because these two aspects are not met. My customs provision says that in these cases, don't pay anything. No duty is payable. Now, this is what explained by BFS circular. Look at page number 1.14 and 1.15. Page number 1.14 and page number 1.15. So this is the third category. Category number 1, sir, I have sold the goods, rejected back by customer. Sir, I have my own goods which are exported for repair, it has come back. Sir, I have my own goods which is meant for trade exhibition purpose. No need to pay. So this is what explained in your notification 45 of 2017, where there is a levy on import of goods. Coming back. Now, there are certain guidelines. What they say, look, I am going to give you this concession. Now, when the goods have come back, if the goods have come back within a period of 3 years, which is with the permission extended for another 2 years, you pay only those benefits which you have enjoyed. In second case, that is your exports. Those goods which I have exported, it should come back as it is. In case of repair, so I have sent a plant and machinery worth 25 lakhs. Same plant and machinery has to come back. Now the question comes here. Say, when you have sent this plant and machinery, so this is my plant and machinery. This is a batch number, this is the identification number, this is a make number. Like your car, when you look at your car, there's the engine chassis number. Your bike, there is a chassis number. Some sort of identity should be there for this second category, that is repairs, that those same goods should be brought back. So I have sent goods worth 25 lakhs, there is a repairs of 8 lakh. Now, altogether, if the engine identity itself is not there, the authorities say, Praveen, you pay duty on entire 33 lakhs. So why I have to pay? Because the original goods which have gone and the goods which have re-imported, where is the identity? Where is the nexus? If you don't have a nexus, you pay duty on entire 33 lakhs. Now, this is what is spelled in case of identification of your identity. Now, these are the exceptions. What they say, goods export by a EOU, foreign trade zone, or from a warehouse, or which are of a fourth schedule. I don't give this benefit. There is a bonded warehouse. I did an assembly in a bonded warehouse. You are given a liberty not to pay customs duty. You have taken back from India to Kenya. Example of that, what you call a DG set. There is a bonded warehouse. From USA, the goods have come to your India. You have enjoyed the luxury not to pay customs duty. You rather kept in a bonded warehouse. You did an assembly. From warehouse, you have sent it back to Kenya or you have sent back to USA. Now, those goods have come back. Look, I'm not going to give a second innings. First time I have given a benefit. Now you pay entire duty. Or goods which are meant for EOU. EOU have imported without payment of duty. Gone abroad, again came back. They said, look, I don't want to give you a benefit. Rather, you pay your customs duty on that. Now, so what if opposite? This case, I have sold the goods, have come back. What if the goods have sold, came back for repair? Goods have come back for reconditioning. Now, there could be these cases. Like, I've sold goods with a warranty. So, the customer has not rejected. The goods have come for the purpose of repair. After repair, I have to send it back. Is it possible? Answer is possible. For this, there is a notification 80 of, there is a 2018. This is a old notification. Now, this is what they say. Page number 1.16. Now, this is an exception where goods are manufactured in India and these have been imported for repair or reconditioning. Now, look at this clause, look at this. Repair or reconditioning. Repair is a minor alteration. Reprocessing, I do entire process. Refining, again, it is a revamping. Remaking, completely a new product. They say that for repair or reconditioning, I'll give you a time limit of 3 years. In case of reprocessing, refining, etc., I'll give a time limit of 1 year. For what? For import and re-export. But actually, repair and recondition takes a very short time. They have given 3 years. For reprocessing, refining, etc., they have given 1 year. Now, what they say? The goods which have been imported should have been exported within the given period of time, and the identity of the goods should be established. Whatever goods you have imported should have been, identity should be established. Sir, I brought a hard disk sold by me. Now, is there an identity? Sir, there is no identity. Then how do I trust that the goods, what you have sold have come back? Always, in case of this export and re-import, there is something called chassis number, engine number. There is some identity which is established. Like example, you have your handset. I have IMEI number. So there is an identity established for the purpose of these goods which have been imported. And as a process, they execute a bond 3 times the duty which is foregone for the purpose of re-export. Next. Very interesting topic. We move on to call next topic called goods derelict, wreck, jettison, etc. Now, page number 1.18. Page number 1.18. Example, they'll just ask you a simple question. Differentiate between jettison and flotsam. Simple definitions from your section 21. Now, all goods. Now, the benefit of this particular derelict or wreck is where there is a exemption. The goods are entitled for a duty-free entitlement. Like goods have come to India by way of a derelict, jetsam, flotsam, wreck. So these are the goods which have come to India on its own. For those cases, they say that the goods are exempted. Now, let's look at these definitions. Quite interesting. Derelict. Derelict refers to the term where there is a cargo or a vessel which is abandoned in the sea with no hope of recovery. There was one instance, it actually didn't got into the public attention. One ship which was traveling at the time of COVID, which is actually bound to China, that particular ship was not permitted to get inside the India China border because of COVID. Now, these kind of cases where the particular cargo or vessel has been abandoned, that's called derelict. In humanitarian grounds, or there could be cases where those vessels are not fit for taking back. So they abandon. There are various reasons. They say it's a policy decision. Why exactly they have abandoned? There could be some sort of arms and ammunition. There could be some sort of poisonous gases. There could be some sort of danger which is threat to the nation. Those cases, they adopt this technique called derelict. That means a cargo or vessel abandoned in the sea with no hope of recovery. Why do they do that? They have their own reasons. They don't reveal all the things. Now, jetsam. This refers to the goods which are thrown away. Vessel gets heavy. When the vessel gets heavy, they throw some items from the ship or vessel in order to avoid this vessel from sinking. So to save this, this cargo or vessel from sinking, the goods are thrown, which is called jettison. Jettison means they throw away those goods. There's one movie, I don't remember. No Man's Land. This I've seen this 2.5-3 years back. It's a Hollywood movie where one gentleman happens to. There will be a crash of a flight. This leading role lands in a no man's land. It's a small island, and the family members believe that this fellow has died in this plane crash. And in the process of his journey, he sees that when the plane gets crashed, some goods get floated and it gets passed on to one part of the soil. And using few goods which are available, he spends some years together. On the soil, he will have a ball with him who will feel that he's the only companion he has got. So that's the case where just jettison, where you throw away goods out of your cargo or vessel. Why? Just to save that particular cargo or vessel. That's case of jettison. Flotsam. Now, this case, the goods which are jettison, which continue floating in the sea, are called flotsam. So those goods which have thrown, they sail, they travel. Those goods which have floating capacity, they float and go with the tides and just reach one part of the soil. That's called flotsam. Floating of those goods which have been jettisoned. That's called flotsam. Finally, wreck. Now, wreck is a scenario where a cargo or vessel or any property which are cast ashore by tides after their wreck. Now, there is a breakage of this ship. The heat they get broken and they get carried to a particular shore by way of the tides carry that particular ship after they have been broken. Right? Now, examination, these 2 points they'll ask you for your theory question. Just a simple theory. Moving on further. Why we talk about this 21, section 21? Reason, no one has imported the goods. The ship, the cargo, or the jettison goods. Those goods have traveled on their own. Since the goods have traveled on their own, we call them as section 21, where there is no liability on those goods which have been imported. Rather, the goods have traveled on their own. Now, this is rules which have been tested in your page number 1.19. I'll make it very simple. It's lengthy rules. It starts at 1.17, 1.19 goes to 1.23. In simple and easy way, I'll explain this. Customs import of goods at a concessional rate. The backdrop of this particular provision now. There are few entities like your EOU or STPI. These are the trade bodies where they do a manufacturing activity or they do a service activity. This particular import of goods at concession rate, rules 2017, they talk about a scenario where I intend to import some goods. Those goods which have been imported, I can call them as a raw material. I can have goods which are procured locally. I import the goods. So when the goods reach customs port, I go to the customs officer and say, my dear officer, look, I have a factory in Maharashtra. I have a factory in Haryana. So you give me a permission. I take those goods to my factory in Pune or my factory in Gurugram. I do a manufacture. I do an assembly. And these goods, I export back. So when the goods have come, it has come for a particular process. After the process, I assure you that it will go back for export. So what is happening here? Inflow of money, exflow of money. So there is a foreign currency which inflows and outflows. So for the purpose of increasing the business, I should not make my exports costlier by way of duties and taxes concerned. So this is a mechanism where a permission is given for clearance of goods without payment of duty. Now, I as a manufacturer, so what happens here? Say the manufacturer is in Pune. And so the customs port is in Mumbai. There will be someone called jurisdictional officer, customs officer, and there is a appraising officer in Mumbai. That means when the goods are imported, I don't have any port in Pune. I have my port in Mumbai. So first, I as a manufacturer, Since I am there in Pune, I go and approach my jurisdictional customs officer. My dear officer, look, this is my factory and this is my process. I want to import so and so material. Please give me a permission that these goods I manufacture in, I export it. So once my jurisdiction officer gives me a permission, I go back with that permission to this appraising officer, or I intimate this jurisdiction officer. In turn, this jurisdiction officer will write to this appraising officer or customs officer in Mumbai. So that officer gets to know that so and so manufacturer in Pune is importing so and so metal from so and so nation for so a particular process. In doing this entire process, I enjoy benefit of payment of customs duty at a concession rate, right? This is the backdrop. Students, we are at 8 o'clock. Let's have a break for 5 minutes. 8:05, let us resume back. Let us continue with our discussion. Before I start with the discussion, let me just see if there are any questions so far. Yeah, there are a few questions. Let me take those questions and we'll go further. Okay. Namita is asking this question. Sir, import completed when goods become mass of the country. So why in current spinning wheel case it was written that import completed when goods cross customs barrier? Import completed. Namita, import has not completed. My import has commenced. In case of Kiran spinning wheels, see page number. We are talking about Kiran spinning wheels. Yeah, Kiran spinning wheels. In case of warehouse goods, the customs barrier would be crossed when they are sought to be taken out of the customs and brought to the mass of country. So in case of Kiran spinning mills, Namita, the goods have been put into bonded warehouse. What will I do with the bonded warehouse? I keep it for some point in time. I do as an assembly and export back as it is, or I clear to domestic tariff area. So in case of this Kiran spinning mills case, just because it got into bonded warehouse, it doesn't mean that it has reached the mass of the Indian soil. Rather, it has been kept in a bonded warehouse, and when the permission is made for clearance from there, it is deemed to be that particular touching the mass of the country. Nisha is asking this question. Sir, what that will constitute a service for assembly? Okay, in case of the assembly, yes, it is a service for assembly. It could be called as a manufacture, Nisha. Like I think you're asking that engine with control panel and this cables and all. If a new product comes into existence, Nisha, it could be called as a manufacture. Now, a service where it is mere assembly. Service is any process or an activity on goods belonging to another person. What if I do a assembly where a new product comes into existence, right? When a new product comes into existence with a different nomenclature, it's called as a manufacture. Look at that way, Nisha. Namita is asking this point. Sir, in Rule 96, example as goods imported after it is rejected by the customer, so customs duty is levied on it as it is not for repair purpose. Yes, Namita, I have sold the goods. The customer is rejected. Once it is coming back, whatever benefit of customs or IGST I have enjoyed, all those particular benefits will be paid back as customs duty, not otherwise. Look at this way, Namita. I've sold goods worth 25 lakhs. When my own goods are coming back, why should I pay customs duty? What is the value addition? Now, point is valid, like for benefit of other students, look at this question this way. In case of Rule 96, the goods are imported after it is rejected by the customer. So customs duty is levied on it as it is not for repair purpose. Once I receive back, when there is a rejection from customer, it is not meant for repair. Absolutely written back. So once the goods are coming back, what I will do? I have to pay customs duty. What is the customs duty? The benefit of duty or drawback or IGST I have enjoyed, the same amount I have to pay back to the government of India. In question of next question, sir, why government is levying duty on value addition in repairs is not clear. See, Namita, I have imported goods worth 25 lakhs. Now, goods are not working. Now, there is a value addition happening on those goods. What is the value addition happening? There is a value addition happening to the tune of, say, 8 lakhs or 5 lakhs. Now, so why should I pay duty on that 5 lakhs? Let's take this example this way. Now, Namita's point, students. So, I have sent my machinery to Japan for the purpose of repair. Actual cost of goods is 25 lakhs. The repairs cost is, say, 5 lakhs. When those goods have come back, why government is collecting tax on that 5 lakhs or customs duty on that 5 lakhs? Let us assume that this is a transaction when there is a consideration not in kind, consideration in other form. So, sorry, consideration not in cash, consideration in kind. So, Namita is there in Singapore. For a moment, let me assume that Nisha is there in Japan. Nisha and Namita have a mutual understanding. So, Nisha is not going to raise the invoice on Namita for that 5 lakhs. So where is the question of duty payment to Government of India? This could be one transaction. May be a related party, may not be a related party transaction. Now, in this case, the goods which have been sent by Namita to Nisha, notionally there is a value addition. Notionally there is a increase in performance. That particular notional increase value is what being assessed for the purpose of duty payment. This is the logic behind this point, Namita. Naveen is asking this question. So in this example, in this repairs example, let us say the company from which we bought the machinery has a branch in SEZ located in India. We send this machinery for repairs to such branch as per the directions from the company. Is it re-importation for repairs rules apply? It doesn't apply, Naveen. Okay, I import. Okay, you are importing from SEZ. Yes, any goods which are debonded from SEZ, it is as good as customs duty is applicable. So in case if I import the material from SEZ for purpose of export, then I can get into this import of goods at concession rate. Possibility is there. I don't deny that. Namita is asking this question. Sir, when Mr. A be allowed benefit under section 13 if jetsam happens? We are yet to travel to that, Namita. Just wait for another 10 minutes. I'll explain you that. It cannot be actually, but anyway, let's wait for another 10 minutes, Namita. I'll clarify your point. I think, Namita, your question is got disconnected. 60% of the consignment on Chennai port. I couldn't understand that portion. No? If you can read a complete question, I'll clarify that. Concessional rate of duty, not clear. Concessional rate of duty, okay. Okay. They don't pay any customs duty. Okay. You're asking this particular point, concessional rate of customs duty. Okay. In this case, Namita, I don't pay any customs duty. I get the material clear. It's a concession given to me. It's a benefit given to me. What is a benefit? You don't pay any duty. You get a concession that you get a waiver of duty payment because you are meant for re-export purpose. What if you are not met with your condition? Then you have to pay your duty along with interest and penalty. So in this process, students, what happens? I define the manufacturing process. I also define where all my job work is located, what all process is done by the job worker. Similarly, a service provider, only a approved, predefined or approved process goods can be imported. I can import the goods for a particular service activity, which is again exported back. So only those cases I get a concession rate of benefit to pay, get the goods without payment of duty. Now, I can use it for service, I can use it for manufacture. So we are so far so good. You have said that you can get the goods without payment of duty, use it in your manufacture process, and then export. So far so good. So what happens? By some reason, I have not used the goods. I have brought the goods. In the process of manufacture, I got to know that these goods are having a malfunction. Means it is not fit for production. I have to send it back to my this particular original fellow. Or these goods are not consumed. I have to return back. Now that is a point in time where the customs duty will be attracted along with the duty. The goods have been used for some point in time, and then you are going to send back. The government says, look, 100% is the value of goods on which you have used for some point in time. I depreciate over a period of time, and the left out value, written down value, on that I have to demand duty again. Now, all this process, for simplicity, Institute material has not tested. If you actually see these rules, this is a year-wise depreciation. If I use the asset for 3 years, if I use the asset for 4 years, I use the asset for 5 years. This is a depreciation of 5% per particular tax year, particular period. Based on the depreciation, I find out the actual value of the goods and I calculate the duty on that. So what if the goods are not capital goods? Then whatever duty is payable from the date of importation till the date of sending back, I pay the duty along with interest. Now, this is a process which is involved. So here what happens here? Execution of a bond for duty along with interest, along with penalty. Means the goods which have been imported for a particular process, you sideline, you use it for some other activity without the permission of the officer. Then those are the cases where the authority consent to protect the interest of revenue, he will invoke a bond. You give a bond or a bank guarantee for the duty which you have saved. Now, Namita asked this question. So, what is a concession? Do I get 50% waiver? Do I get a 60% waiver? You get 100% waiver. And how this concession is enjoyed? Look at this way, Namita. Capital goods and inputs. Capital goods, there is a depreciated value on which duty has to be paid when returned. And inputs, duty on entire value. Right? So the goods at the time what you have imported, what is the value? The same value on which you have to pay back your duty when you are sending it back because you have not used those goods per se. So this is the entire process involved where goods have been imported for the purpose of a specific activity of manufacture or rendering of a service. Now, there are a few definitions, not that important. I'll skip those definitions. This we have discussed where information is to be given. I give an intimation to my jurisdictional officer, and that particular officer will give the intimation to the customs officer who process my goods at the time of import. Now, there is a return to be filed on a quarterly basis. Now here, sir, how does a customs officer get to know how many goods I have imported, how many goods I have consumed? Now, EOU and SCZ, lot of compliances, documentation work. Many of professionals after qualification, they get into this SCZ and EOU. Reason, a lot of compliances are there where professionals like you are of highly in demand. Reason, accuracy, compliance, understanding the law in minute aspect, topmost protecting the interest of the organization. For these reasons, SCZ and EOU, these locations pay high remuneration to hire a professional. Now, in this case, documentation. Once in a quarter, I have to file a return to the concerned jurisdiction officer. What I have to do? Bill of entry wise, bill of entry is nothing but a formal declaration that goods have come for clearance. Those items, what I have imported, those items, how much I have consumed, how many I have processed, how many I have exported. Out of the goods which I have received, I have maintained an inventory. How many are left unconsumed? How many goods are to be returned back? What is the duty of those goods which I have to pay? So there is something called running bond. I execute a bond, say for 2 crores. Now, how it happens? I give a bond for 2 crores. So when I import first consignment, say for 25 lakhs, the bond will be debited for 25 lakhs. From 2 crores, I debit 25 lakhs. 1 crore 75 lakhs is the balance. Again, next consignment comes, say 50 lakhs I have imported. So again, I debit the bond. From 175, I debit 50 lakhs, left with 1 crore 25 lakhs. So this running bond is a bond where I debit when the goods are imported. When I export back, I credit back that particular bond. Out of manufacturing activity, I exported goods worth 50 lakhs. So what I do, I take credit back of 50 lakhs. That means whatever 2 crores I have imported, look, I have received so much of goods and I have exported so much of goods. This kind of account is maintained in this particular procedure. Again, examination, nothing of this is tested for you. They'll just test you what is the basic backdrop of this import of goods at concession rate. That means what is the procedure? Who can follow this? Manufacturer. What is the procedure? Write a letter to the jurisdictional AC. That particular AC will write a letter to the concerned customs station. And on the basis of that, I receive the goods, I maintain the records. And once the material has come, I keep an intimation by way of a quarterly return to be filed. Now, this is a case where the goods which have come are not used or defective. So this exporter was not utilized, or there are goods which are excess in quantity or goods which are defective. Within a period of 6 months from the date of import, with the prior omission, remove shall be, he shall assess the value of the goods. Now, he'll say, sir, I have imported goods worth, say, 10 lakhs. Of this, 6 lakhs is the worth material which I have to export back. Now, when I'm saying 6 lakhs, what was the quantity? What was the value? Same quantity, same value. So I just need to calculate this math of when you have originally imported, what was the value? When you're sending back, what is the value? Now, what they say, from the date of import, within a period of 6 months, you pay the import duty equal to the difference between duty leviable on such goods and exemption avail already if paid. So, if at all, if you have paid any duty, you reduce that. If you have not paid, you pay the tax along with the interest and penalty. Sorry, interest alone, no penalty, because you have received back and you are sending it back with the permission. So, penalty is not applicable in these cases. Now, Namita, your question gets addressed here. Kiran spinning mills, what you are referring to, that point exactly you get a crystal clear clarity over here. Section 12 talks about my levy. So when is the levy? When the goods enter, we will determine whether the goods are leviable or not leviable. Like example, we have discussed this jettison, section 12, where goods have come by way of their own jettison goods or this particular float stamp. Section 12 talks about levy. At the same time, Section 21 says, look, the goods have come on its own way. Why do you want to levy the goods? It have not been imported. Reversal of Section 12 is Section 21, right? Now, Section 12 talks about your levy and when do I get a point in time when I have to pay my tax. When you look at your GST law, I know that point of taxation. Similarly, my time of supply is determined in Section 15. What they say, when goods are entered for home consumption, either filing bill of entry or date of entry of inwards of vessel, arrival of aircraft, whichever is later. This is called incident 1. Filing bill of entry is the intimation to the customs authorities. Sir, I have imported so-and-so goods. Please give me permission to get the goods clear. Or date of entry of this vessel or aircraft, date of entry inwards means the permission given by the customs authorities. So whenever there is an international flight which is coming in, whenever a ship is coming into the territorial waters, they just give a intimation that, look, I am so-and-so carrier, I'm carrying so-and-so goods. Then they get a prior approval to get those aircraft or vessel into the Indian nation, Indian borders. That's called entry inwards. So either of these two, this is called second step. Whichever is later, that is a point where I have to pay my customs duty. Example, Section 15, determination of duty. Now, to understand this, we need to have clarity on these two aspects. One is date of filing, bill of entry, date of entry. Now, scenario 1, scenario 2. I'll say date, rate. Now, let us assume that my file of billing of date of filing bill of entry is 13th August 2021. Actually, the vessel has reached, it got a permission on, say, 20th of August 21. Now, section 15, determination. Now, section 15 says that whichever is later, out of these two dates, whichever is later, take that into consideration. So my later point is 20th August 2021. Similarly, let us assume that my date of filing of bill of entry is date of entry happened on 15th September 21. 15th September 21 means the day when the vessel has got a permission to enter into Indian territorial waters. After receipt, the ship has entered, say 1 week later, 22nd September 21, I file my bill of entry. So whichever is later. So in this point, my later point is 22nd September 21. Now, in scenario 1, assuming that 12% is the rate of duty on 13th August and 18% is the rate of duty on 20th August. So here, my section 15 says that date of determination shall be either filing of bill of entry, date of entry, whichever is later. Since later point is 20th August, my rate of duty happens to be 18%. Now in this case, on the day when the date of entry took place, my rate of duty happens to be, say, 25% or say 24%. On the day when I file my bill of entry, my rate of duty happens to be 12%. So here, whichever is later shall be the determination time. So my rate prevailing on that date, 12%, shall be adopted. Is this clear, students? Section 15, how do I determine the time when duty gets crystallized? Are we clear with this? Scenario 1, scenario 2. Let me know if you have any doubts on this. I'll clarify. This discussion material will be shared. We will upload every class, so you can download and have access to this discussion at any point in time. Let me know if you have any doubts on this discussion so far. Namita is asking this question, continuation to Naveen Kumar. So in case of goods imported from SEZ, how do we call as an import of goods? Now, in this case, Namita, SEZ is also, though it is not outside India, any goods which are cleared from SEZ, it will be called as a debonding process. As what happens in customs, the same thing happens in case of SEZ. So SEZ also has got a customs officer. What I will do, I'll write a letter to so-and-so jurisdiction officer saying that, so I would like to have a debonding, that is without payment of customs duty from so-and-so SEZ location. So this is an exceptional circumstance where goods are purchased within India. So far, so good, no doubts. Let me come back to my presentation. Sir, in case of warehouse goods, Namita, your Kiran spinning mill case comes over here now. Date on which bill of entry for home consumption is presented. So in case of warehouse, date of entry of vessel is not relevant. Date when bill of entry is filed for home consumption. Now, examination, you can expect 2 marks question from this particular slide. Confirm the date of determination of duty in relation to filing of bill of entry. They'll give a date. Entry of vessel, they'll give a date. So here, what you do, whichever is later, you take into consideration. On that day, what is the rate prevailing? That you need to take into consideration. So in case of warehouse, let's assume that the day when the vessel has come, say 40% is the rate of duty. 40% is the rate of duty. And this particular assessee, importer, has kept this particular goods in a warehouse. And the day when he filed his bill of entry, the rate of tax happens to be 12%. the rate of duty happens to be 12%. Now, question will be asked, examine the rate of duty applicable. Though the day when the inward permission is given, rate of tax duty is 40%, because my filing of bill of entry is the date relevant for section 15, my duty payable is at 12%. This is how you classify the point in time when my duty gets crystallized. Examination, please expect, wait and watch for 2 marks question from this particular determination of date of duty. In any other cases, the day when I pay the duty, that shall be my point of determination. Next. Now, pilferage. Namita, your question gets answered over here now. Pilferage, I'll give an example before we understand this concept. Imagine there is a soft drink. Like if you happen to see this Coca-Cola, Pepsi, or Limca, or whatever be the soft drink, these soft drinks comes in a case, in a plastic case. There's a box or a plastic case, like 24 by 12 or 12 by 18. Each crate we can call as a crate or a case or a box. Now these pieces comes in a particular box. So this soft drink, which is imported in a particular crate, now when the moment you open that particular crate, you will see that one particular bottle is missing. That could be a pilferage. Example number 1. Second, example number 2. You would have seen this particular what do you call chocolates, like Diwali. In Diwali, you would have seen that there are chocolates which are given as a gift. There are few chocolates which have very, very high value. And if you see the way the chocolates are packed, each chocolate has got a particular space where this chocolate is positioned properly. Now, when you open the box, you will see that 10 racks will be there where 10 chocolates can be kept, like a wafer, Kit Kat. The way you see Kit Kat, there is a small bay where you can keep your chocolates. Assuming that there is a small hole to that box, and from the hole, one of the chocolate was taken out. Now, what is happening here? It's a petty theft. And how do you see that petty theft? To happen that petty theft, the box should be cut and the item should have been taken out. So when you see that particular cool drinks crate, one slot will be empty. Similarly, the chocolate, in the packing, somewhere there is an open. From that open, you can take one particular wafer outside. And when you actually open the box, you'll see that out of 10 wafers, 9 are available, 1 is missing. And that slot of 1 is clearly visible. So this is an example where I apply this concept called pilferage. So pilferage happens where the material have been unloaded. But before the officer passes an order for what? For clearance for home consumption. So when I import the material, the unloading happened from a vessel or an aircraft or a vehicle. So there is an unloading. Now, customs, like none of you or me have this experience or exposure where we went to the customs area. Practically how it happens, whenever a particular vessel comes, the unloading of those boxes happen at a particular bay, like Namita, you asked the area. So what is the customs other area? That is an area where these goods are temporarily stored before the appraisal is done, before the assessment is done by the proper officer. So here, this is the case. What happens? The material have been cleared. When the material have been cleared, nothing happened. It was intact. Reason, the in charge of an aircraft, the in charge of a vessel or a ship, they actually give an assessment certificate. They're saying that I have brought 10 boxes. Look, I have handed over 10 boxes in a packed condition. So after the unloading happened, somewhere in between, the point from unloading till the assessment order is passed. Now, this is the gap in which the theft happened. So in this case, where the goods are deposited in a warehouse, the importer shall not be liable to pay the duty on such goods. What? The goods which have been pilferaged. Sir, I have imported 10 chocolates. Only 8 chocolates or 9 chocolates are there. Whenever there is a pilferage, section 13 comes into picture. I don't pay duty on those pilfered goods. Why I should not pay? Because goods are not there. The duty is payable on goods. When the goods are not there, why should I pay the duty? Now, your point, Namita, comes here. Now, for the benefit of other students, Namita is asking this question. So when there is a jettison, when the goods are, float sand, when there is a float sand, the goods are getting floated on the water, the sea water, and it has reached the customs zone. So can I apply section 13? Now, it is not a pilferage. It has floated on its own due to the tides, Namita. So section 12 generally does not get applied. Now, can I call that as a pilferage? It is not a pilferage. No one has stolen. The goods which are intentionally thrown, that's called jettison. Those jettison goods gets floats and comes to India. So it is neither jettison nor floats in case of my pilferage. This is how section 13 talks about Namita. Now, importance of my pilferage, I don't pay the duty. Now, the point here, goods are not in the control of the importer. The conditions to be satisfied, imported goods have been pilfered. Pilferage occurred after the goods are unloaded, before the proper officer makes the order for clearance. And then goods have not been restored back. Now, this is important point. Goods have not been restored back to the importer. Most of these cases, you would see smuggling, where the tiny like mobiles or your cloth material. Most of these smuggled goods is the case where you come across this particular pilferage. So the customs authority says, look, it happened in our customs area. Let the importer not be burdened. Let us not demand duty on those pilferage goods. So this is what section 13 talks. Students, when we talk about section 13, remember 12. 12 is Lord Shri Ram. Section 13 is your, like say, Sita Devi. Pilferage. Someone has taken Sita Devi. Sita Devi was taken away by Ravan. So, this is how pilferage can be attached. Just correlation so that you will remember in your examination. Now, how does the pilferage will be established? So there is a tampering of packages. So there is a blank space which is available for the package. And these are articles of units, not as small particles. I cannot say, sir, pen is there, pen cap is missing. If pen cap is missing, I cannot call as a pilferage. In the bunch of pens, one pen is missing. Then it's called pilferage. Only mere cap is missing. I cannot call that as a pilferage. And pilferage is found when at the time of removal. Generally, it is noted by customs officer. And sometimes even the customs officer will not see. But before handing over the goods to the customer, that is importer may see that there is a pilferage. Now, if at all importer sees, sir, I have paid my customs duty, there's one pilfer item which has been pilfered, then this importer has to get a refund of those pilferage goods. Before we travel to section 22, 23, that is Lakshman and Hanuman, this 13 says, look, I order for demand on the goods and I levy duty only on the goods which are actually cleared. So if there is a pilferage, no duty. And pilferage is not dealing with your loss of goods. Pilferage is not dealing with your loss of goods or destruction or damage. Loss is your goods are completely lost. I don't deal with that. Section is not applicable if pilferage takes place prior to unloading. This particular pilferage happened prior to unloading. Sir, in the origination, the owner of the ship, this particular driver of the ship or aircraft, he said, sir, 10 boxes were brought. Unfortunately, 8 boxes are there. What happened to 2? Sir, jettison. I have thrown 2 boxes because there is a excess baggage. I have thrown 2. So he'll say only 8. Now, in that case, I cannot call that as a pilferage. Next is your remission of duty on lost, destroyed, or abandoned goods. Remission is as good as refund. Now, this talks about goods which are lost, goods which are destroyed or abandoned. So I can use this term remission as either refund or waiver. Refund or waiver. There is a principle under customs law. I don't know how many of you have seen this particular remission concept whenever there is a fire accident. So the inventory which is there in my closing stock is burned because of fire. And the sentence says the duty gets attracted when the goods are removed. Now, when there's a fire accident, there are no goods. I remove that as a scrap. So on removal, I have to pay duty. So there is a concept called remission of duty. That means customs, the excise officer waives off the burden of payment of duty. That's how this concept of remission comes, where material have been lost or destroyed. Like when I talk about this section 22, imagine your tsunami or natural calamities, where there was a tsunami, entire Chennai port, material were washed out. So when there is no consignment, there is a duty, there is a remission. When the goods are destroyed, how destruction happens? Maybe due to fire. So there is a fire incident which is beyond my control. Because of this fire accident, the goods are destroyed completely, or it may destroyed in a warehouse. Goods are abandoned. The importer has given a right on those goods. Once the right is given away, I need not pay any customs duty on those goods. Now, these are the three circumstances which are discussed in my section 23. Section 23, which talks about my remission. This says, without saying anything under section 13, that is your what do you call goods which have been petty theft. Just give me a minute. Yes. Okay. So this particular section 23 says that, look, whenever there is a loss or destroy or abandon, pilferage does not come here because it's not a petty loss. When a loss happens, 100% loss happens. When there is a damage, not damage, when there is a destruction, 100% gets destructed. So I don't call this as a petty, that is pilferage. It is shown to the satisfaction of AC or DC. Now, why satisfaction? Sir, I haven't done anything intentionally. I haven't put a fire. I haven't destroyed this material. It happened on its own. I have no intervention on this. Where it is proven to the satisfaction of this AC or DC that any goods have been lost, any goods have been destroyed, anytime before clearance of home consumption. Let me just clear this math. This loss or this destruction happened when before I have cleared for home consumption. There was no intervention of mine. In those cases, the officer concerned shall remit the duty. That means he can waive off the duty. Now, the provision gets applied where after duty has been paid. So what if I have paid the duty? You can claim a refund because these goods are not received by me. And whenever there is a application of this provision, goods are lost forever and beyond recovery. So when there is a fire accident, take example of your chappal. Say Bata chappal. So I have imported some rubber chappal. There was a fire accident. When there is a fire accident, there is nothing left except the ashes. After fire accident, can I recover anything? Sir, I cannot recover anything. That's a case where remission comes into picture. If I have paid a duty, claim a refund of that. Where officer passes an order for this remission. Now, this concept is tested. If you remember, students, I have asked one example where Mr. A has imported the material after delay in due date. That is covered here where importer has a right to relinquish his title to the goods. So this section 23 says that at any time before an order for clearance for home consumption, where a bill of entry, officer concerned is not passed an order for clearance, or the goods are kept in a warehouse where I have not cleared the material from warehouse. In those cases, the importer has a choice to relinquish his title. Why does this happen? Relinquishes may happen generally because of non-compliance with commercial agreement, or because of some incident happening where importer feels that this is of a substandard quality, he doesn't want the goods. I'll give an example. COVID was a classic example. There was one of the manufacturer. They import something called Dana. Dana is a granule which is used for plastic components. This Dana which is imported has got a life of 3 months. Only within 3 months I have to use. If not, this loses its quality because it gets composition. It gets mixed with A. It loses its the standard quality of using in production. During COVID, it so happened that the consignment got stuck for clearance. Many nations have been affected where consignment which was imported, none of the customs officers were willing to file bill of entry to do inspection and clear the material. Now, those cases, even if I get that Dana to my factory, I have to throw it as a scrap. So this manufacturer decided, let me not import. He has relinquished his right to the goods. So that is a case where he feels that it is of no use because of quality issues. Now, this relinquishment can happen. It cannot happen where there is a possibility of offense which is being committed under this act or any other law. Like example, smuggling. There was a news that goods from so-and-so origin have been, there was some sort of wrongdoing. Invoice says 100 kgs, but actual consignment has come for 500 kgs. Invoice says steel, but actually the consignment has come for metal, which is called gold. Now there is some sort of smuggling or non-compliance related those cases. So when there is a news from the businessman gets to know from some of the customs officers that this particular consignment has been marked for examination, there's a possibility to expose the importer. Those cases, the importer cannot relinquish his title just to get away from these formalities of prosecution. Now, how does it happen? Relinquish means it is giving away control or leaving away the title to those goods. Importer is not willing to take the delivery. He can, because it is not as per his specification, or these goods have been damaged in the process of reaching in India, or there is a breach of contract. In any of these cases, this relinquishment can happen by way of a endorsement of title to a principal commissioner or a commissioner of customs. So this importer will pass on the title to those goods to this particular customs officer. Now, I was talking about this movie called Badmash Company. In this movie called Badmash Company, this leading role, Shahid Kapoor, what they do? They import Adidas or Nike shoe. How do they do that? They get a consignment bag, right leg in one consignment, left leg shoe in another consignment. Right leg shoe gets imported in the first consignment. So when the consignment comes, this particular, the leading role, he goes to the customs authorities and says, sir, look, I ordered for a pair of shoes. There was only one right leg shoe. I don't want this. He has relinquished his title. So what he does, he passes on title to the commissioner. Now, what does the customs authority do? They cannot do anything with those shoes. They put it for public auction. So he participates in an auction. One of his friend participates in an auction. He gets those goods cleared by payment of customs duty. It is not smuggled goods. So there is a right to the title to those goods. After some days, another consignment comes with a left leg pair shoes. So again, as usual, he will go to the customs. He says, sir, look, these goods have been substandard. I ordered for a pair of shoes. This fellow has sent only left leg shoes. I don't want those shoes. So again, he abandons that. He relinquishes the title to those goods. Again, it goes back for an auction. Again, the same fellow participates in the auction. He gets those shows. Now, what he does, original value of customs duty, assuming that on 60% I have to pay, or 14% or 20, whatever be the rate, it was purchased at a dead cheap price. It was he gets those material with a lesser customs duty, and those shoes he puts in one box and sells at a lesser price to get a competition, to get a market price. Now, this is one tactic in case of your relinquishment of goods, which was used in this movie called Badmash Company. Next, we will understand the differences between pilferage and loss or damage. Section 13 covers pilferage, Section 23 covers damage. Now, pilferage, it's a petty theft. In case of loss, 100% lost. In case of pilferage, I don't pay duty on those goods which are pilfered. Now, in case of a destruction, whatever duty has been paid, it shall be remitted back. So here, upfront, I will not be paying. Here, whatever duty I have paid, I'll get it back as a refund. Subsequent restoration, if the goods pilfered are restored back, the importer is liable to pay. In case of a destruction, there is not possible to restore back. So when there is a fire accident, where is the question of restoring back? It doesn't happen. Warehouse goods. Pilferage is not applicable when there is a theft happens in a warehouse. Reason, from the clearance till the order is passed for warehouse, a pilferage should happen. If anything happens in warehouse, it is not liability. The duty is not waived off. In case of destruction, it may happen even at a warehouse. Onus to prove, it is not on the importer. Onus to prove, it is on the importer. Time of occurrence, from the date of unloading till the time of passing an order. In this case, importer must have lost these goods after they have been cleared for home consumption. Before clearing for home consumption. So from the day unloading, before I clear for home consumption. So from aircraft, they have kept in a customs area. From aircraft, they have put into a warehouse. At any point in time, my destruction can happen. Examination, expect a 4 marks theory question, comparison between pilferage and destruction. Moving on. The last point of today's discussion, abatement. Abatement is a proportionate duty for there is a damage or deterioration. Now, I'll give an example to have a better understanding of this provision. Let me come back to my Excel file. Section 22, which deals with your damage or deterioration. Now, assuming that there is a motor vehicle, that is car imported, whose market value is 2 crore 50 lakh. Now, this is normal, this is damage. Now, this particular car which has been imported, in the process of importation, so there is a dent, there is a glass broken, and there is some paint peeling off. Now, some sort of damages were noted in the process of importation. So they say, sir, if I have to sell this car, customer will not buy for 2 crore 50 lakhs. He'll demand for a reduction of 10%. This is my reduction. So what is my value after damage? Is 2 crore 25 lakhs. So here what happens? My customs duty, say assuming 12%. On 2 crore 50 lakhs, I pay 12% customs duty. Say your cess surcharge 10%. On this 10%, value for IGST. So IGST will be 2 crore 50 lakhs plus 30 lakhs plus my surcharge of 10%, social welfare cess. Now, IGST, assuming that in India, 28% plus 12% cess. So 12%, 28% is my IGST rate. IGST cess of 12%. Now, on this, I'll charge 28%. On this, I charge 12% cess. So what is the total duty? My total duty happens to be cess plus IGST. I'll move the screen so that you can see this. Yeah. My cess plus IGST plus surcharge plus customs duty. Now, 1 crore 46 lakhs 20,000. Now, you would have been questioning, sir, is that fellow a fool? For 2 crore 50 lakhs, this importer is paying 1 crore 46 lakhs customs duty. Now, if you ask this question, I would say all imported cars have this duty. Though so much of duty is levied, there is a fanciness, so much of richness in India. Punjab, Haryana, Kerala. These three states, you will see cars, imported luxury cars, and duty is paid royally to the government of India. Now, ideally, 1 crore 46 lakhs 20,000 is the duty payable. Now, what happens here? Because there is an abatement which is possible under section 22, my section 22 says abatement. Here they say value after damage divided by value before damage into customs duty, into duty payable. So this is the equation they are given under section 22. Where is the symbol? Yeah. So value before after damage. My value after damage is 2 crore 25 lakhs. Value before damage is 2 crore 50 lakhs. This multiplied by duty. My duty is 1 crore 46 lakhs 20,000. In simple terms, if I compare this, 90% is what I get. So answer would be 2 crore 25 lakhs divided by 2 crore 50 lakhs into customs duty payable. I have to pay this much. 1 crore 31 lakh 58,000. Duty as per section 22 after abatement. Now, this is discussed in your section 22. Now, sir, why do we do this? Now here, the importer has proven to the satisfaction of the officer concerned. Sir, I imported the material. Unfortunately, there was a damage. You want to levy duty on those goods. This particular goods are either damaged or inferior quality. Now, once I prove to the satisfaction of the officer, I get this benefit of reduction in payment of duty under section 22. I call this as section 13 pilferage, section 23 lost or damaged, section 22 abatement, along with levy. Rama, Sita, Hanuman, Lakshman. Now, this is how I read these three sections together for the purpose of payment of duty. Now, the question comes here. So, how do we assess this value of 2 crore 25 lakhs? Now, this assessment is done by the proper officer. Now, whatever is the damage, the proper officer determines. Praveen, you have imported car worth 2 crore 50 lakhs. But internally, customs officers have a surveyor. They do the survey, they do the assessment, they do the scrutiny, and they say, this is the way, value of damage happened. I abate so much of value. So this is how my duty gets determined under section 22, right? Now let me see quickly if there are any questions so far. Nisha is asking this question. Sir, oil containers while shipping, it might spill out. Can it amount to pilferage? Absolutely. It cannot be, Nisha. Like this pilferage should happen after the date of clearance, after the importing. Now, if this oil spillover, Nisha, from the aircraft, if I'm removing, and from after the clearance, it is happening from the date of from the point of clearance, then yes, it can be called as a pilferage. So at the point of loading, from there, pilferage is happening. It cannot be called as pilferage. Reason, the driver, that is the owner of this craft or vessel, aircraft or vessel, not owner, I would say the custodian, the in charge of this aircraft or vessel are responsible for this particular concern. So in this case, Nisha, from the date of from the point of clearance, if there is any spillover, yes, you can call that as a pilferage. Namita is asking this question. So what can be any other case in section 15? Either we clear goods or kept it in a warehouse. I didn't get this question, Namita. Let me have little clarity on that. Okay, Namita, I think for Jetsam, I have cleared this point, Namita. Naveen is asking this question. Sir, in case of float SAM, what if goods were claimed by the importer? Okay, fantastic. Naveen is asking this question. Sir, in case of a float SAM, goods were claimed by the importer as he identified the goods by some identification method like chassis number. Float SAMs generally, it so happens that like you've thrown that. Once you have thrown that, you don't become the entitlement to those goods, and you haven't used any transportation to get those goods clear into the customs territory. You don't have any permission sought. So you cannot become the technical title owner to those goods. And those goods get covered under section 21, Naveen. It cannot go restore back the title to the owner. So once you have done jettison and by way of a float SAM, it has come to customs, section 21 prevails and you cannot be an owner. Good interpretation, Naveen. Namita is asking this question. So goods are damaged by rats, terminate till then will duty be reduced? Damage or destruction. Rats cannot eat a bag of sugar. Rats can eat some portion of the sugar. Now, eating happened in the warehouse. Eating happened after clearance, but before home consumption. Now you have to determine the point, Namita. Is it a pilferage or is it a damage? Now that is how you have to find out. Nisha is asking this question. So before unloading, if the goods are lost, then duty to be paid on whole goods, right? This is what I was saying, Nisha. Before unloading, if the goods have been lost, then this owner of aircraft or ship, they will have information because they do a assessment, they do a survey, like how many boxes, 21 boxes, or what is the kgs. Based on their determination, they say, I have 21 boxes, he gives a certificate. That's called survey certificate by appraiser. And once that certificate is given, Nisha, and it's deemed that it is clear properly. From there, pilferage starts now. Nisha, hope this is clear. And yes, and if the goods have been lost after this unloading, you will go with section 13, pilferage comes into play. Namita is asking this question. Duty is to be paid on those 2 boxes which are thrown out by the pilot. Why? Remember section 12, Namita? Levy gets attracted on goods. When out of 10 bags, 2 bags are thrown out. Only 8 bags are there. Duty gets assessed only on 8 bags, not on 10 bags. Again, good point of reasoning, Namita. I appreciate your point. Naveen says, let's say I exported goods under replacement warranty. I received goods back from the customer and I have to export new goods to him. Then if you are sending the new goods, Naveen, whatever goods you have imported, you will pay the duty and then send other goods. Namita is asking this question. Sir, in loss or destruction case, goods destroyed before clearance, hence duty is not paid. So how it can be remitted to importer? If I haven't paid the duty, it is a remission. No need to pay duty. If at all, if I file a bill of entry, Namita, and then the destruction happened, then whatever duty I have paid, I get it back. Provided I prove to the satisfaction of the assistant commissioner that it is not my road. It is the beyond my control, that damage has happened. Namit is asking, sir, if car is imported in dismantled form, a wheel is broken. To the extent wheel is broken, you will take only that value, Namita. Right? Okay. So these are the questions so far. We are at 9:06. We will end our discussion today. Students, if any questions are there, don't worry, I'll take back those questions in my next session. Till then, see you all. Good night, goodbye, and Jai Hind.